and your children are turned into mindless vassals who now they look up to some twit instead of looking up to Thomas Jefferson or looking up to Nikola Tesla or looking up to Magellan. I mean, kids, Magellan's a lot cooler than Justin Bieber. He circumnavigated with one ship the entire planet. He was killed by wild natives before they got back to Portugal. And when they got back, there was only...
But why? $22 million in 3 fucking hours! There is no nobility in poverty. I have been a rich man and I have been a poor man, and I choose rich every fucking time. The real question is this: was all this legal? Absolutely fucking not. Neither go towards the feeding grounds at the edge of the ice, nor return to the colony. Shortly afterwards, we saw him heading straight towards the mountains, some 70 kilometers away. Dr. Ainley explained that even if he caught him and brought him back to the colony, he would immediately head right back for the mountains. But why?
What's your dream? To go away.
To go away. That's right.
Do you guys want to drink? I don't understand why everybody has to be so judgmental. I understand why mom's judgmental. I think it's because she cares partially. I think it's also partially because everyone else is looking at her like, hey, Cody's just a bum. Cody's this, Cody's that, Cody's this. Cody's me, bro. Let me be me.
Let's go. What's up, boys? How we doing? Just me. A little bit of a new stream layout today. Still kind of touching it up and perfecting it. Whipped it up real quick. What a stream today, boys. We got an exciting one. We got peak and open grading coming on. Markets are ripping up like no one's business. Stable coins, RWAs, payment infrastructure is getting massive bids from private equity companies and firms, and we get none of the upside. Man, we're going to figure it all out today. Let's see. Background. Do we want to hit this background or this one? Should we keep it chill today? What are we thinking? Nah, we'll go with this one. Yeah, but an exciting day nonetheless, boys. We're going to go to class. I got a little class coming to session today for everybody because I want to talk through some of the raises we're seeing because man, it feels kind of bad. We're in crypto and we're watching, the few categories actually pull away that we believe in, like, RWAs and the tokenization of all these assets and equities. It's great. We're seeing it firsthand. We're seeing private companies kind of come on chain with tokenization, which is awesome. We're seeing stablecoin payments blow up. We saw Visa put in a record year. I think they dominated like 98% of stablecoin payments. Absolutely insane. We're seeing the growth of just stablecoin payments, right? So stablecoins and the use of stablecoins. And so there's all this stuff happening, but unfortunately we have no access to it, right? And that's kind of the issue here because as someone who's been in crypto for a long time, we're seeing what's winning firsthand. It's like, oh, well, of course this is going to do good. These are verticals that are going to 10x in the next couple of years, but we have no access to it. So we're going to talk through it. We're going to talk to maybe some of the edge we have, but nonetheless, a little bit of an early start today because we do have Peak coming on at 12. It'll be an interesting conversation. If you guys haven't been tapped in with Peak, they are doing a lot in terms of the agentic economy. They're kind of pioneering this zero human company conversation. We had Robot Money on not too long ago. And, obviously they integrated with Peak. They've got their Woon agent, which is a hired agent by the Peak company. So that'll be an interesting one. And then Open Gradient is a new protocol that launched. We're just going to kind of get the scoop on that. But what's up, guys? Thanks for joining in. Thank you to Trojan and Meteor, of course, for supporting the show. You guys can always go and trade with us on Trojan at trojan.com/@MCG for the best cash back from out of all the terminals, up to 50%. So if you're a trader, simply want to keep more money, that's how you do it. Nonetheless, let's jump into it. I got some stuff to show you. So I'm going to pull up the screen here. Let's see what I want to start with. Sure, we'll start with this tweet. Why not? We'll start with this tweet. All right. So this is the gripe I've kind of been having, guys. And we talked about this a little bit. Let me pop it up. All right. And screen. So, and you know what? This background is a bit distracting. We're gonna go static. Okay. So, saw this pop up yesterday. There was a $72 million Series A that was co-led by Multicoin and Signal Fire for Fun. Now, Fun is modern payments. It's payment infrastructure. And $72 million is a huge check. And I mean, it just kind of got me thinking, my goodness, crypto has finally done such an amazing job of finding its fit with stable coins, with crypto payments, yet we're all sidelined on it. Another example of this is KO recently raised $19 million, in their strategic institutional round from Tether, Systematic Ventures, alongside Laser Digital and others. So again, another example of just a massive raise happening. To also add on to that, we saw Altitude just this week as well. This is all in the last, 2 weeks we're seeing this stuff. Altitude, which is doing banking, stablecoin banking, payment and stablecoins, raised $18 million for what they're building. And I say this and I show all these examples to say, man, we're clearly missing out on an opportunity here. Like, we've clearly spotted it. We've identified it. And as on-chain participants, we're completely missing the boat. Now, KO, or Kaio, I guess is how you pronounce it. And I'll pop this up in full screen. Why not? Kaio, how you pronounce it, I will say, is having a token. It is having a token. To be determined how valuable this token is. But of course, it's a governance token, which I think we're kind of tired of. To further talk about this, to really let it sink in, I'm going to pull up some charts. And I talked about this yesterday. But just have a look at this. This is pretty insane. Crypto card spending is the next big trend. Now, of course, we knew this. But it's nice. The Kabisi letters finally reporting on it. Crypto card spending volume has surged 500% since September 2024, now running at 600 million per month. As a result, stablecoin linked payment cards are now one of the fastest growing businesses on the blockchain, with 90% of transactions captured by Visa. And we know Visa's strategy. This is something we talk about, guys. Now, when you see all these neobanks popping up, when you see all these on-chain payments, we say the same thing. It's like, okay, guys, it's really cool what's going on here, but it's just a wrapper. It's just a Visa white labeled product. And it's kind of actually crazy to see just how much business and of stablecoins and payments Visa is capturing. Look, I mean, with 90% of transactions captured by Visa, stablecoin linked payments, Visa's strategy has centered around partnering with emerging infrastructure providers, which reduces reliance on traditional sponsor banks. The growth comes amid the launch of Jupiter Global, which returns 4 to 10% cash back to crypto cards and has seen 660% month-on-month volume growth in April. 660% month-on-month volume growth since April. Crypto card adoption is growing. So again, that's that payment. That's that QR code. We know QR code in emerging markets, emerging countries, in third world countries is huge, absolutely blowing up. Take a look at this. This is a pretty compelling chart here. Tokens on Solana released this. It is RWAs by tokenized asset classes. Now, I had this interesting discussion the other day on my Twitter about we're seeing these crypto card platforms absolutely blow up, and we're seeing kind of NFTs get a bit of life from it. And the thesis was, well, NFTs back in the day did not function as they were supposed to. In fact, NFTs have a place, but it's more so for ownership, verification, proof of reserve, proof of ownership, proof of reserves, whatever. And I think it has a chance to come back in the form of NFTs in the form of RWAs like we're seeing here. And, like Pokemon cards is the first example that comes to my mind. I digress. Take a look at the top 7 CoinGecko's RWA reports. Tokenized RWAs tripled since 2025. And by the way, we're going to go through this. I'm going to get to a point of like, okay, what does that mean for us? Where can we position for this? So tokenized RWAs tripled since 2025, reaching 19.3 billion by the end of Q1. Wild. Tripled. Tokenized RWAs tripled since 2025, reaching nearly 20 billion by the end of Q1 in 2026. Largely, this is going to be tokenized equities, tokenized commodities, and I'm thinking Hyperliquid's a big chunk of this. Maybe something to talk about later. Tokenized commodities. Okay, you can really batch this number 2 into number 1. But number 2 is tokenized commodities. Rose from 1.4 billion to 5.5 billion, driven by Goldback, XAUT, and PaxG. Of course, Hyperliquid and making this tradable on perp exchanges, etc. Tokenized gold spot volume hit 90.7 billion. Again, you can literally just box both number 2 and number 3 into number 1. But tokenized gold spot volume, and again, this is not just accounting for Hyperliquid. Now this is accounting for the tokenized gold and tokenized silver RWA platforms that we see popping up, also raising at pretty good valuations. We've talked to quite a few on the show. But tokenized gold spot volume hit 90.7 billion in Q1, surpassing the 84.6 billion traded in all of 2025. Tokenized stocks scaled from 0 to 500 million since mid-2025. This is the big one. This is the big one that I think grows a lot here. It scaled from nothing. No one was doing tokenized stocks to 500 million since mid-2025, and that's still very early. This is tokenized equities and tokenized private equities, I think, that are starting to see a lot of attention. Specifically, what excites us is the emergence of private equities on chain and, not getting absolutely railed buying SpaceX at $2 trillion worth of IPOs or buying Anthropic and OpenAI above $1 trillion worth of IPOs, but instead getting access via, X stocks, pre-stocks, pre-IPO projects like Tessera, who is releasing Kalshi pretty soon. So go tap into that. Shout out to Sarah. Tokenized stock spot volume hit 15. Again, tokenized ETFs and RWAs. Literally everything mentioned here can just loop back into number 1. It's just tokenized RWAs. And I get this is the tokenized RWA asset class barometer here. But this should go to show you how much tokenized RWAs are growing. And so I just wanted to point that out for you guys real quick as well. Let's talk about Tether. So that was tokenized RWAs. Let's talk about stablecoins, because stablecoins have found a massive product market fit. Okay, massive product market fit. And we could see Tether, for example, stablecoin businesses. I mean, like, what a blessing to have. Posts a $1 billion Q1 2026 profits, despite a highly volatile global markets. And the terrible market we're in terms of crypto. So crypto's in a terrible spot. It's a terrible market in general. And Tether still is making $1 billion a quarter. So absolutely insane. Now, of course, there's no way to really position in Tether. You can position in Circle, which is something I guess we can talk about later. But also on the note of stablecoins, stablecoin transaction volume surpassed Visa's payments for the first time in 2025. Stablecoins processed 33 trillion versus Visa's 14.5 trillion. In 2020, stablecoin volume was closer to 0. In 2020, stablecoin volume was closer to 0. Today, we processed $33 trillion in a year. Insane. And it's flipped Visa by about double, by over double. Insane. Absolutely insane. Look at this spike. Okay, product market fit. I say all that to say product market fit. We can see it happening. We can see it happening. Again, this is the chart of Fission made this post. This is RWA chart, tokenized stocks, tokenized commodities, tokenized treasuries, just up and to the right. Just up and to the right. So I say all this to say this is all happening, but, and I'll pull up Collector Crypt as well, right? This is another one. Blockworks for the next 5 days. They're making their Collector Crypt dashboard free to access. Look at this, man. 26 million in weekly revenue. 26 million in weekly revenue. Happy Friday, Ave. Happy Friday. Happy Friday, buddy. $26 million in weekly revenue from Pumpcade. Are you kidding me? Are you kidding me? And so this is why I make the argument that we may see a pretty massive emergence here for, or argument for NFTs, right? Because if Collector Crypt is a digital trading cards platform, what's very similar to digital trading cards? NFTs. Okay. Now, my thesis on this was we actually get a whole new class of market. It's almost like futures contracts for RWAs, specifically cards in this example, right? So right now, marketplaces have a few options. Number one, you can participate in the gacha, spin the wheel, right? And we know cards is plus EV to actually spin that wheel. Spin the wheel, get a card. Cool. Now, what can I do? So I can buy that card from, I can buy a card from marketplace. I can sell this card in the marketplace, or I can sell this card directly back to the TCG platforms. Okay, so those are the few things you can do. What I think is really interesting is some people don't have the means to acquire some of these Grail Pokemon cards. Yet we see the Grail Pokemon cards specifically increasing in value quite a bit. You know, and the newer cards today, from my perspective, is they're very inflated. They just keep printing, but it's the old rare ones, PSA 10s, whatever, that have a lot of intrinsic value and continue to grow the most. So what we could see now is these future contracts on these trading cards. And so what happens is I'm Joe Schmo. I have a PSA 10. It's been going up like crazy. I want to realize some profit, but I also want to hold on to this a little bit for the next year. So what I can do now is I can tokenize or sell at marketplace value, maybe a little bit below marketplace value, a piece of my card to actually hedge myself, right? So I sell 20% of my card. Now 20% of my card is tradable. So now what's happening is I, as Joe Schmo, am earning 20% of fees on this card. And I have this futures contract that in 12 months, this will go up for auction on that TCG platform. So in 12 months, I will get the proceeds of that, 80% of the proceeds. And then the other 20% will go to, you know, pro rata distributed to the other buyers of the market. And so this gives people, if they want fractionalized ownership or upside, an interesting angle. Potentially even, you know, like an index, have some of the top fluctuating cards, you know, well-graded cards in an index fund. You can buy fractionalized ownership of that. But I think this is a very interesting concept. I don't want to, you know, sit on this for too long. But my point is, what do we trade? Okay, what do we trade? That's what it comes down to. Because like stablecoin infrastructure growing massively, found product market fit, check. QR payments growing massively, payment rails, you know, via stablecoins for the most part, but crypto-based payment rails growing massively, also check. Okay, that's 2 checks. RWAs like equities, tokenized private equities, tokenized commodities growing at a massive rate. Okay, absolutely check. So how do we benefit from this? Now, the first answer, it may seem obvious to everybody. It's Hyperliquid, right? It's Hyperliquid. And I know it's like, how do you buy Hyperliquid? This thing's just been going up. It's like the best performing asset. I agree. We saw an interesting report the other day comparing Robinhood's price to earnings for the most part with Hyperliquid's. My conclusion from this report was that Hyperliquid is undervalued. I'm a big Robinhood fan. I think this is the direction we're headed for finance in general. Vlad's innovative, but Hype still poses as an undervalued trade here. Again, like when I look at Hype, I say, okay, I would love to DCA sub 35. It'll be a blessing if I get that. I don't know if I will. And so probably the best strategy with this is if you believe that tokenized equities are going to continue to be a thing. And of course, you know, Hyperliquid is integrated. I think what's more so even valuable than the Hyperliquid platform itself is just like, who's going to be integrating Hyperliquid in the future, right? They're so far ahead and they have so much support. They're kind of de facto winners here that you're going to start seeing platforms who want to list some of the stuff Hyperliquid has, just white labeling Hyperliquid and listing it through their platform. So Hyperliquids, of course, always a good bet, but everyone's kind of screaming for Hyperliquid. So, we have to go down the risk curve. Now, we talked about KO. Now, KO's got the token coming out. Not an endorsement of KO to buy this token. I need to see what, it's a governance token, doesn't have really intrinsic equity in the company, but we should be somewhat paying attention. Where I do think the opportunity lies, okay, and this is what's important. Where I think the opportunity lies for this kind of stuff is people love this crypto infrastructure, but they hate like crypto tokens. Hopefully at some point we get to a place where these companies want to go raise $19 million on chain rather than through a bunch of strategic angels. And I think people would be willing to buy that stuff. If you brought me a company that like KO is doing 100 million, got 100 million TVL, growing, has some really good, I guess, partnerships, I think on chain could probably raise that $18 million that they raised, or what was it, 9 million, 18, whatever it was. So that's the question. I don't know. So we can position on Hyperliquid. Also, like on-chain payments. I think MetaDAO maybe offers some interesting ICO mechanisms for this. So maybe we go and see on-chain payments or something come through MetaDAO. Let's also jump over here to Pumpcade, guys. Okay, kind of getting sidetracked. Oh no, you know what? Let me finish this segment. Okay, so you can buy Hyperliquid. Outside of that, man, it's kind of tough to say, but I would say, like, truthfully, one that's gotten beat down quite a bit is Circle. Circle's gotten beat down quite a bit, but they will absolutely lead the stablecoin race. You can't get access to Tether. I think Circle's probably one to bet on. We see it's gotten beaten down since IPO again. Like, sucks that people were forced to kind of buy post IPO at this price, so on and so forth. But it's come and had a brutal correction. I think most crypto related equities are being suppressed a bit because of the crypto nature of the company. With that said, I think Circle is probably a very interesting bet. So we've got Hype and we've got Circle. So Hype's going to be a lot of the tokenization of equities. We've seen a revelation of people realizing I can trade gold, I can trade oil, I can trade silver over the weekends. I can trade off geopolitical news when the market's closed. I'm not confined in this box. Then we see Circle, who is really on the forefront of stablecoin payments. Now, of course, this is going to be affected by legislation. And, I think some of this dump we saw was due to people suspecting that we weren't going to get some clarity on legislation. The Clarity Act passed and all that stuff. But Circle's really an interesting one to watch. And I think we've seen a lot of the brutal downtrend here hit. So keeping my eyes on Circle. Of course, you know me, Robinhood. Now, Robinhood's earnings were not great. I do really want this to come down to the sub 50 range. But again, Robinhood's doing a lot in terms of this tokenized equities and private equity stuff as well. So good on them. Outside of that, I think, I just want access to some ICOs. Oh, man. And this whole time, you just saw my face, but I was pointing. So again, Robinhood, sub 50, sub 50. And then I had Circle just beaten down anywhere in this range. If you can get it, I think potentially a good DCA. So, Josh is a big Galaxy Digital fan, and what they're doing, Galaxy Digital is looking pretty good. But nonetheless, I digress. Let's do a quick broad outlook. And of course, we talked about the markets are melting to the upside. Absolutely melting to the upside. Look at the NASDAQ here. Unreal. We've had 1, 2, 3, 4, 5, 6 down days in this entire move. Oh my goodness. Mind you, we're still in a war. I don't know. I look at this and I can't help but feel like we're just frothy. Like this is in a war, terrible inflation. Economy is pretty bad. Economy is very bad. S&P at all-time highs. NASDAQ at all-time highs. Dow Jones at all-time highs. Or it's tickling all-time highs here. Gold and silver, interesting reset and flush here. Man, we've had a historic run. But when you look at this market, I think once we start seeing equities really take a tumble and downturn, look to position more in gold and silver. It's tough to buy up here, but again, like how can you fade this? And of course, not to toot my own horn here, but publicly been calling silver since COVID here in 2020. Talked about buying a lot through here in this reaccumulation, whatever. Cooked on that. Up 300+% on silver, whatever. I I digress, guys. We're going to jump here shortly to talk about Peak, talk about what they're building. Again, some really fascinating stuff there. One thing about Peak that's interested me a lot is we had Robot Money on a while ago, and I think just since we've seen a lot of this agentic economy pick up, Peak's really adopted it. They've done a great job adopting it, and they're kind of pioneering a lot of this zero human company narrative, agentic organizations and operations. And so I think like that's one of the things I really want to touch on. They had some interesting updates as well here, which I will share real quick. You know, Peak OS is finally here, and it's ready to turn robots and machines across chains into investable assets and financial actors. It's time for the blockchain to live up to its full potential. So yeah, happy to get some more clarity on this. Excited to talk about Peak and just get the full scoop. So without further ado, let me bring up my guy Martin, if he's ready. Chat. Hey, Martin.
Hey, what's up? Thanks for having me, guys.
Yes, yeah, we're excited to chat. I can say Peak has been on my radar. I mean, since, well, I guess the lore here is since day one. I remember when you guys launched, a lot of people were really, really excited for Peak and what you guys were kind of pioneering. You've always been focused on, you know, this RWA sector and the verticals here. And I guess recently, you know, we talked to Robot Money not long ago and the team there, and you know, we're just fascinated about like the rails that they were providing for this agentic economy. You guys are really ahead of the pack here. Could you kind of just maybe introduce yourself real quick, and then we'll get into a lot of this stuff that you guys are working on, Martin?
Sure, happy to. Yeah, my name is Martin. I'm obviously representing Peak as a chief business officer there, and just in a nutshell about Peak, I think we've been around for a very long time. I'll try to make it brief, but it's difficult because we have a long history, right? So we've been
The lore.
we've actually building in this space of what we call the machine economy, and what is in everybody's mind now. We've been working on this for more than 7 years now, right? And initially, that was before I joined. The team has really been focusing on kind of solving problems within this agentic economy before it even existed, right? So on the enterprise level, collaborating with big companies like the Volkswagen Group on decentralized charging infrastructure, collaborating with big machine manufacturers, companies like DMG Mori, Vodafone, etc. And really the core underlying problem that we've always kind of tried to figure out is that when you think about a very simple case of a machine paying another machine, the infrastructure was not only not there, even within like one conglomerate or one company, that was impossible, right? It was unthinkable. So we actually went in back then in a big project that we did with Audi, which was about decentralized charging, and which was specifically about a Audi car being able to communicate and pay a Porsche charging station. And the history behind this, or the relevance behind this, is that if you think about it in a still relatively big scale, which is one big global car manufacturer, right, where the different machines operate in their individual API silos, they can't authenticate each other, they can't communicate with each other, they can't pay each other, they don't have any rules they can enforce, there's no trust on the machine level. We basically said, okay, we need to actually think this as an open source infrastructure, because if we want to see this futuristic economy that everybody is talking about day in, day out, where you have suddenly autonomous drones that are picking up groceries from a humanoid who picked up, let's say, a coffee from a robo cafe, right? Or when you have drones that need to basically manage entire agricultural fields automatically, make sure that they are watered, make sure that they get all the chemicals or all the supply and nutrition that they need. How is that even possible if the communication between a simple charging station and a car does not work, even though when this company is in the same this machine is within the same company infrastructure? And so the solution for us was we need the blockchain infrastructure, and that is what we then built. We built Peak for that exact purpose, and the specialty about Peak has always been that we provide all the standards for the machines, right? So the machine identity that is universal, that enables any to authenticate each other, certain payment rails that we've established, the first agentic systems that enable people that build applications for these machines to be able to have these machine-to-machine transactions, trust systems, reputation system, universal machine time. And then recently what we did, and that's, I think, the biggest change, and that kind of became very public a couple of weeks ago when we published the purple paper that is called Robot Money, and actually shaped by Lex, also that term. So that is where kind of these things come together, because Lex was an investor in Peak very early on, and is one of our greatest partners and supporters. We basically said, look, in order for this to work, we need to take it omni-chain. And the core realization that we had is that the machine economy obviously will not be happening on one chain. It will be happening on many different ecosystems, many different infrastructures. But regardless where it happens, a machine is like a human, right? In order for it to work in this AI-enabled economy, which it is an inevitable future. I mean, we all, I think, agree that the vast majority of global value creation will come from autonomous machines, and specifically physical machines, because they create value in the physical world, right? So basically what we enable now is we enable these machines to take all of these things that we've developed, but to travel from A to B. A machine can communicate with the service that is provided on Solana, even though the machine sits on Base. We basically take down these guardrails and these boundaries, and really focus on what always has been our core element, and that is making the machine ownable. And so the tagline really is enabling machines to do everything that they need, or to have everything that they need in order to be able to do business on chain. Machines doing business on chain and on every chain. And yeah, last night a big update went live. It's a part of a staggered approach, where more is going live in the next couple of weeks. There will be some exciting updates. And yeah, nice. You have you have the video, exactly. Yeah. So PicoS is that update, and PicoS is really everything that a machine needs in order to become an investable asset, an economic asset, and an economic actor at the same time. So that is what Peak is all about.
Okay, well, fantastic answer there. I want to touch on PicoS. This is a really interesting update. You mentioned, everything that a robot agent needs to become a financial actor and investable. Can you, that's pretty broad. Can you kind of break down what that actually entails? Does that mean, we're using on-chain payment routing, we're using agentic communication? What is in this umbrella of PicoS?
Yeah, think about it this way. I can actually give you a very tangible example, because we've actually piloted this already in with an actual physical asset in Hong Kong, right? But if you think about a human transacting in the global economy, or moving in the global economy, humans have identities, right? They have passports, and these passports, they can use them, and they can travel from A to B with these passports, right? A machine needs to be able to have the same thing. It needs to be able to authenticate itself. It needs to be able to prove that it is actually real, and that is an actual economic actor. That is what the Peak identity provides. It's basically an omni-chain identity standard that enables any machine to verify that it's real, and that it claims that it is who it claims to be. So that's the first part of PicoS. Then the second part of PicoS, which more details will be revealed in 2 weeks, because the process is currently loading. But that really is what we call the machine credit rating, right? So similar to how we have different levels of credit ratings, credit scores, etc. When we want to borrow money at a bank, right, we basically have to verify that we have the liquidity. We have to verify that we are in the situation to do that. Every single machine that uploads, or that integrates or uses PicoS, will automatically start building this machine credit rating. And what that does is it enables the machine to be collateralized, it enables the machines to be investable, and most importantly, it enables the machine to be trusted. And trusting a machine really means that obviously there needs to be something at stake, right? And that is really kind of the core economic primitive of the Peak token, which is reputation, right? So every machine bonds Peak tokens for reputation. And if it doesn't meet these rules, then basically, or it doesn't behave to or send the claims, or behaves in a way that it pretends, right, or doesn't manifest the claims, then it can get slashed. And really, what we're now building is we're building a similar system to the human system, to the human economy, but focus on these machines, and we don't compete on the payment rails, right? So for us, I think when we were initially starting out, obviously as a layer one, you focus on TVL, you're focusing on transactions, right? Because this is how you accrue value to your system. In the new future, that becomes secondary to us. For us, it doesn't matter, right? The transactions can settle on the chains that we support, and the same is true for the TVL. What matters to us is that we are onboarding all these machines. And we've started to do that, obviously, a while ago, because our focus has been deepened, which in many ways has been kind of the initial way of seeing this machine economy come to life, because it provides the decentralized infrastructure that is necessary to kind of nurture this global decentralized machine economy. But now, obviously, we're going much stronger into the RWA angle. We did that already a couple of months ago, end of last year, where we tokenized an entire robot farm in Hong Kong that is now community owned. It basically produces salad. It is 95% automated. There's here and there's obviously still some human intervention. And we have more machines that we put on chain together with our partners at Dualment. And to put that also in the context, because you were showing now the Zero Human Company and the robot money slide, right? And the idea of what that, like the bigger picture that fits in. If you segregate Peak into 3 layers, then you have the coordination layer, right? Which is basically the omni-chain layer. That is like the basic layer where all the transaction happens, where the TVL sits. Peak OS is the second layer, which is the financing layer, right? Which basically sits on top of it. And then the third layer, and that is where we will have some interesting releases again over the next 2 to 4 weeks, right? This is where machines actually act economically. We've piloted that in many cases, right? We had escrow transactions between a unit drone, for example, that we showcased a couple of weeks ago. When we released our ROS2 SDK a couple of months ago, we piloted similar cases where a robot can consume deepened data in order to navigate in its environment, for example, right? But the idea really in that service layer is that any service on any chain, a compute provider on, for example, right? Or a data provider on Base, whatever it might be, can basically put their services there, and then the machines can consume the services whenever they need them. And another part of that, so that's the services. The other part is the machine money markets. And this is really Zero Human companies like Robot Money, which is basically an agentic treasury at the end of the day, or developing into an agentic treasury where any machine can basically invest and park capital. Peak machines are already doing that. So the vertical farm already puts a percentage of its revenues into the token and soon also into the vault, right? We have great conversations with Tom Osman and the Zero Human Company Institute around incubating more of these Zero Human companies. We've incubated Woon. I don't know if you heard of that, our own basically intern, right? Which to a certain degree is also what we consider like a machine capital market or a machine money market to a certain degree, because at the end of the day, it has certain strategies in order to basically grow its portfolio, grow its wealth, with the goal to someday become a real robot and actually get his own physical body. And that really showcases it on 3 layers, right? Because the machine economy is not just infrastructure, it's not just payment rails, it's not just the identity standard and the different functionalities for a machine to be an on-chain citizen and an actual economic actor. It's also to provide the services and the systems that make it behave almost like a human being would in the real world. And so we are focusing on the center stack, right? The rest is open source. Any machine money market, we are super happy to collaborate. We've worked on this a long time ago. We were quite involved back then in Ex Machina at the very early days, which is the largest robotics DAO in crypto. Great project, fantastic team that has then taken this idea and now has invested in the biggest humanoid robotics companies you can think of, right? Giving people exposure to this emerging category. And so this is where we collaborate with all types of builders. Whoever wants to offer a service, whoever wants to work on Zero Human companies, machine money markets, this is really kind of the place where we try that out and then make all of our robots, of course, the clients for these services.
I want to touch a little bit more on the 3 layers you just broke down to us, and of course the Woon agent as well. But before we get into that, I want to get your vision, I guess, on more of the direction we're headed, because in order to understand some of these layers and why they're important, we need to understand, I think, directionally where we're headed in terms of like society and economy and world in general. So I just want to ask you, what is going to be affected by this agentic economy? Obviously, you mentioned payments quite a bit, and we see this massive emergence of stablecoin payments and on-chain payments and massive emergence of RWA and just like how that's coming on chain and the benefits that has. In your perspective, what does the economy and I guess world look like in 5-10 years from now? Just so we can understand a bit better on how you're positioning for this.
Yeah. There's a very dark scenario and there's a bright scenario, right? And and I think about this. I think about this a lot. Obviously, I think we all do, and it's funny that you're bringing this question up because it feels like even though nothing, like if you're not in Iran or in any of the affected regions right now where there's war, but it feels like there is a huge uncertainty and a huge tension in the air, right? That everybody is sensing because things are moving so fast that we can't catch up. And I think the most important thing to understand here is that this is not just another economic transformation. To me, at least, this is how I interpret for it. It's the creation of a new species, right? And to what degree this new species is human controlled or completely autonomous will significantly determine where we are headed. As an industry, it will determine where the world is going. It is much bigger in its transformative impact than the internet, because when we kind of brought the internet to life and enabled this hyper connectivity and basically the catalyst for globalization, it had a huge transformative impact on the world, but it was still manageable because we were not dealing with an actor that only 0.0001% of civilization actually understand, if at all, right? So the question is, what is the intention of this new economic actor? And at the end of the day, that is why I think the physical realm is so important. At the end of the day, any species thrives to survive, right? And we basically, as a human species, we've gotten to a point where we've met our basic needs. If you think of the Maslow pyramids of human needs, right? We have widely, at least in our part of the world, the fundamental things that we need in order to thrive. And so we start thriving for economic maximization, right? I think machines and AI are profoundly different. And this is where the big uncertainty is. It's what is going to be the core driving factor for autonomous machines in the digital and later also in the physical realm. I think they will have to move into the physical realm. They are already, not because we as humans decide that, but because the core resource that they need is energy. And energy at the end of the day is not created in the digital space. Energy is created in the physical space, right? And so this is the big question mark where nobody has an answer, right? What does that mean? What will the intentions be? What will be the driving force be? Now, if we go into the, let's say, next 5 to 10 years, I think one thing is clear. We'll see a huge shift in terms of how our societies are structured, simply because we will have machines that are much more efficient than human beings doing the exact same tasks, right? What we will see is that many of these machines will generate exponentially more value than their human counterparts, especially also in the physical world, right? Because there is a beautiful part of it. Hazardous labor, right, can be completely replaced. You don't need to send people into coal mines where the chance of them dying or having severe health consequences is pretty high. A machine can take that over. A machine will also take over many of the manual jobs that people probably want to do. The only issue is that our economic systems are not designed for that, right? And so the big question is going to be, when this fleet of autonomous machines goes beyond the industry, which is still, I think, a bit further away than many people think. I speak with many of the big humanoid robotics manufacturers. I speak also with many of the big companies that are consumers of these humanoid robotics manufacturers. And the consensus right now is, that I hear from those that are actually building these companies and interested in buying it, is that in most cases they are not there yet, right? The physical realm of, like, the physical AI realm is not even close to being as progressed as the digital realm.
For sure.
But it is nevertheless an inevitable thing that is going to happen at scale. We saw what Figure released the last couple of days, right? We all saw the images. Is it a matter of 1 to 2 years? I don't think so, but it's a matter of 3 years, 4 years, 5 years. And then the impact, and that is why we have always been focusing on this so much, is in order to participate in this economic value creation, you need to be able to own a stake in these machines. There's no other way around. And that is exactly why PicoS is so important, because it enables anyone to own a share of the machine economy and to basically benefit from the productivity and the output that these machines are generating. And so if the machine is having a fixed yield that it generates just from the job that it is doing as a robot, and then can at the same time use any agent logic to participate in machine money markets, to increase its yield by investing in robot money, to increase its yield by opening predictions on robo.fun or on any other prediction or a prediction market or things like that, right? Then suddenly the yield profiles of these individual machines is not only backed by real world value, it has a huge scalability that is built on top of it. And I think what we're seeing, we had the Gen AI moment a couple of years ago. Everybody and their mother were pivoting to software, right? Everyone basically sensed this opportunity that now is the opportunity to build something, right? That has to a certain degree commoditized. I think software, the moat for software is so low that it's almost negligent to a certain degree, right? But that is not the case for hardware. And this is one thing that I'm seeing, and that's me maybe also being based out of Germany, right? Where obviously we have a huge manufacturing backbone in this country. If you go into the wider Munich area, for example, and you look at the potential and the type of robotic startups that are being built there, in all different realms of robotics, from military robotics to supply chain to humanoids, right? You're literally blown away. And I think we are seeing exactly this shift. We are seeing that happening now, and that is where we are focusing on the physical side. That is our core focus.
So I think this is the crux of the conversation here. Peak is simply a player here that is trying to provide ownership in the future of this machine economy. And the best way to do that is positioning in the agents that at some point are going to dominate it. How's that going to look from an economic standpoint? Is this going to be, okay, so I have a warehouse and I need to hire one of these little arms, right, to go do certain tasks. Would I have someone come and install them and then maybe the profits are distributed pro rata to holders? Or is this like, okay, I'm employing this robot and it's going to be paid $3 an hour and it's going to work 24/7 and we're going to get, dividends from that? Like, how does this look in reality?
So there is, again, different layers to this, right? And I can't openly speak about all of them because some of them will be released fairly soon, but I'll try to give you a bit of a sneak peek into how we're thinking about this, right? So if you divide hardware financing into layers, right, then you have the very early stage layer, obviously, right, which is the early stage robotics builders that are in need for capital, right? This is what we've always been supporting and what we continue to support, right? Which is basically you build a DeepIn, you need bootstrapping capital, you need an investment. There we will have more institutionalized way to make that capital accessible to these robotics builders, but also to enable people to own an early stake in not only in that hardware, but also in the projects that are going there, right? And then the second layer, and that is the one that we have quite heavily piloted already, which is things like the robotic vertical farm, where you have a machine issuer, you have a machine manufacturer. They have a business plan. Of course, we vet it at the beginning because we can't just randomly in such a new asset class just basically put like anyone tokenize their machine and just put it there, right? And then raise from the community. So initially there will be a more controlled framework. But what that means really is that you basically put your machine on chain, you raise the funds for your machine in order for it to run. And the community gets their money paid out based on the yield that this machine is generating in the physical world from the labor it does. In the case of the robotic vertical farm, it produces fresh greens and salad. It sells it through its own store, but also through its distribution channels in the community. And then at a higher level, and again, that's an important point, right? So here, because you said, is there an operator that comes and installs the robot arm? In that case, there needs to be an underlying business behind it, right? So just tokenizing a robot arm does not solve any problem, because obviously the robot arm itself is only an economic factor if it's actually conducting physical labor and is getting paid for it, right? So this is where the vetting comes in place. There is an element behind this where this will be opened up because, as you might have heard, we've partnered with the Virtual Asset Regulatory Authority. We signed an MOU with them end of last year, and we are also currently in the process of establishing regulatory frameworks around machine tokenization. That is something that hopefully we'll be able to share some more news. But then the idea is obviously that any licensed manufacturer, machine owner, can obviously launch its own tokenized business and deploy their robot and their machine that is creating real world value without us always being the ones kind of vetting them. But of course, if you get the license, there's a certain type of vetting process there. The third layer is on the institutional layer. And how we are doing this, I cannot share now, but we've spent a long time understanding what the bottlenecks are for the large scale companies like Fortune 500 companies, right? That want to go more into the robotic direction, modernize their warehouses, etc., and have not done so yet. And we basically understood what the issues are. One of the issues, quite simply put, I don't think it's a big secret, but it's something that people don't really think about. If you do sales as a robotics manufacturer, and consumer sales is very hard, because usually what you need to do is you need to be part of the requirements of the system integrators, right? And this is where we obviously have quite a good idea of what these systems integrators actually require to help these robotics companies to deploy their machines and their robots with the companies that are producing whatever types of goods and services, right? And there, obviously, we also come in and we enable people a stake in the value creation that is behind it. There is stakeholders in the industry that do that, specialized on certain asset classes, and we are working on rolling that out for robots at scale. So, in a nutshell, it's really different types of financial products, if you want to put it this way. Where the Peak ID, the Peak OS is kind of scaled through all of them individually into the machine, because the prerequisite for a machine to be financeable, right, and to be investable is that it has Peak OS, installed. And then we already have, we have more than 3 million sensors and phones and devices that are kind of connected with the system. Now what we are focusing on is getting really the top-notch, high-quality machines into the system. But then once you have that, obviously there is an intrinsic value behind or besides the TVL and besides the payments and besides the economic settlement and transactions, which is the data that they create, which is the analytical value that they create for all types of stakeholders, which then again you can make accessible to increase the productivity of an individual machine just by the services that it can consume through the structure that we have decided to build PeakOS in.
So you're building this ecosystem, this umbrella of products around the machine economy. So okay, yeah. Makes a ton of sense. I think also when I think about this stuff, you have to have a thesis on, okay, well, AI and crypto are going to converge, and right now it seems like traditional companies are kind of scared of crypto and tokenization. Yeah. Now we've seen a lot of progression here with RWAs, especially seeing like hyperliquid success, bringing on institutions to trade like oil or commodities that are tokenized, tokenized equities and stuff, 24/7 liquid markets. But how do you think this AI and crypto world end up converging? And do you think like AI and crypto are the best fit?
I've always thought that they are the best fit. I've always thought that the reason for crypto to exist is the machine economy. And that is AI at the end of the day, right? There's different things to point out here, right? I think there was quite a debate a couple of months ago. I don't recall how it started, but I think it was Lily from Solana made a post, and then there was quite a controversial discussion around is crypto only finance, right? Is it the financialization of everything that is the inherent value proposition of crypto? What about all the content business models? What about all of the other things, right, that people have been betting on and that some people are still believing in? And I think I don't have a very strong opinion on it, but I think one thing that is definitely true is that the most tangible value proposition for crypto is it basically being the financial rails for everything, right? And like I'm excluding AI here on purpose, because even without AI, the problem stablecoins solve and the economic value they unlock by saving costs, by saving bureaucratic burdens, right? I mean, if you ever work in a global company, they have 4, 5, 6, 700 sub entities distributed all across the world, the amount of people that you need to employ just to make sure that you have somewhat clean balances because of the different transactions, the different rules, the different banks that are involved, the complexity is unbelievable, right? And stablecoins have been pivotal in breaking this complexity down, and I am 100% sure that they will be applied at scale. 100%. Like, I think that's inevitable. Now take AI, where suddenly you don't have I mean, of course, right now you still are in a situation where some human or some company needs to fund a wallet, right, for an AI to then do stuff. In most of the cases, not in all of the cases, right? But now what we're talking about is computers that can, at like almost like lightning speed, can just do 5,000 different times at the same time, different things at the same time, all of them including economic transactions, and all of them happening in open borderless systems, right? So there is literally no infrastructure in the world that enables an AI agent or a machine to pay any other AI agent or any other machine, regardless who it is, or regardless in which infrastructure it is built, or regardless in which company it is, or in which API silo it sits. The only open system that enables that is crypto. So the value creation and not only the transaction volume or the tokenization volume that comes through AI, but also just the economic value that is being created is going to just grow exponentially in a very, very short amount of time. And then you can take the other things that are not really often discussed, right? The fact that you need to have machines that authenticate each other in an open system where there is a level of decentralization and security so that these systems are not being exploited. A huge value proposition. Back then in the content industry, many people, that was when I was still in my old life at Bertelsmann Group, right, where we were looking at systems to understand or to avoid all of these kind of fake image creations, fake content. How can we verify that something is actually real? How do we bring provenance into certain types of content assets, right? There is, to me, still no better answer than crypto. And provenance is nowhere it's more important than when it comes to financial transactions and economic value creation. So really, I think crypto will thrive through the fact that artificial intelligence at scale will most likely have to adopt that layer, right? I, however, don't think that this means we'll see a huge green candle on everything, and we'll go into a huge AI-enabled bull market. I don't know, right? I don't know, but I think this time it's going to be much more selective. It's probably going to be slightly different, and it's also going to be much more unpredictable to a certain degree, because if, like, at some point some of these agents will just start going nuts and basically choosing certain things, and choose to do certain things, and maybe there are some selective groups of people that are smart enough to catch that very early, right? But it's not going to be this irrational, let's just pour money everywhere type of behavior, especially because we're not in the global environment. I don't think that we are in the global geopolitical and economic environment where the disposable income of people is just getting higher and higher, and they have that cash, right, in order to just spend it. So I don't know how it's going to be in terms of how the markets are going to develop, but in terms of validating that crypto is needed, 100%. I mean, we will be talking about good and bad robots at some point. It's also a discussion I actually had with Lex a couple of months ago. And when it comes to making sure that people can actually track and prove that a robot is a good robot or a bad robot, that, again, a robot is a good economic actor or a bad economic actor, you need immutability in these systems, especially when the manufacturers are getting very, very powerful, and the control and data and access that they have surpasses everything that we as humanity has ever seen, right? Then I think hopefully we opt into a system that makes sure that there is a certain level of transparency, and the fact that these machines need these rails in order to operate gives me high hopes that this is how it's going to look like.
Yeah, I think there are two things I want to take away from that. I mean, firstly, you're correct. Agents are ultimately going to make the most optimal decision on how to transact and interact, and that's, undoubtedly stable coins, and I think crypto rails. Which brings up the question, okay, well, how do we, I guess, validate and get these credit scores to these agents? And also, I think you guys mentioned you're not really building the stablecoin rails or any of the financial rails. That's not really your focus. So I got two questions on that. Number one, if agents are going to interact with each other like you're predicting, and like we can clearly see here, I think you've laid out a nice vision. Why do they need a credit score? Number one, and you've kind of touched on this a little bit. And how do you guys win? Because there is a good bit of competition right now where people are creating credit scores around agentic commerce. And what do you think Peak is doing specifically that sets you guys, I guess, apart?
I think my connection is breaking a bit, but I think I understand. I think I got the gist of the question. So the question was,
Okay.
why do machines actually need a credit score, and what do we do that basically sets us apart and differentiates us, right?
Exactly.
Yeah. Okay, so let me start with the credit score and the reputation system. I think the utility of and this is where we're releasing also our new economics very soon. Then we can go into much more detail around how that works, right? But at the end of the day, when capital markets work in a certain way, right? And when there is something at stake, something is only valuable if there is something at stake, right? This is the kind of first principle that is relevant. So the moment where a machine is actually bonding tokens for proving its reputation, it has something to lose. And there is two different ways to think about this, and two different ways in how we do it, right? Depending on which choice a machine or a manufacturer takes, the credit score is going to get higher or it's going to get lower, right? And that is the telemetry, like the data availability, the different information that the machine sends, is that actually signed within the machine, or is that operator verified, right? Of course, the most trustworthy way is if the machine data is actually verified within the machine itself. Now, when the data is verified within the machine itself, then what that makes, it creates obviously a certain level, or a very high level of trust, right? If I know that this machine has an uptime of 100%, if I know that this machine has fulfilled its obligation 100% of the time, it makes me, as an investor, as a capital deployer, and ultimately also as an agent, if the goal of the agent is to maximize economic value, it makes it more easy for this machine to be trusted. And what that actually needs, what the different KPI are, what the different criteria are, what the different tools and functionalities are, this is what we've spent a lot of time on over the last 7 years, which kind of then translates into the second question, because we are not really focusing on the agents, right? We are really focusing on the physical machine. To us, these are two different things. We basically see the different agentic frameworks as partners. We are in touch with many of the projects that you would probably call partners or competitors in that angle, because there is a high degree of synergies. And I think the core difference that we see is our access to valuable physical hardware, valuable physical robots that are also deployed in environments where they can create real economic value. And that is really the toughest part, right? Also for us, this is why sometimes things do take time, right? Because you're now talking to large-scale enterprises where basically convincing them to get involved in this new type of economy is not always straightforward, right? And then the access to these machines and enabling then the people to own these machines in a simple and straightforward way, the partners that we can collaborate with, the fact that we honestly are hopefully everybody's friend in the future, because we don't compete on the payment rails, we don't compete on the transaction fees, our tokenomics are by default not extractive, right? I think that sets us up in a way where we will be successful down the line. And of course, it's a highly competitive environment. It's a highly competitive market, and that market has become much more competitive over the last months, right? With this topic picking up relevance, but we keep pushing, and then we'll see.
So we got a couple minutes here, so I'm going to speed run through a few questions. Crypto Jones has a really great question here. I think what this all boils down to is, okay, great information here. How do we align with it? Where can we invest? How can we make money off of it? Crypto Jones says, on that, where would Martin put his money to be early on this inevitable future? Yeah, like you've laid this out for us. Okay, it makes sense. Where should we position? How should we position?
Specifically, I mean, it's very difficult for me to give investment advice, but I think generally speaking, I would think of it in systems and in infrastructure, right? So, for example, when I think about commodities and these types of things, markets are volatile, markets are fluctuating, but we know, for example, some inevitable truths. And one inevitable truth, for example, is machines will always need compute, right? Machines will always need energy. And so, if we believe that this autonomous economy is emerging, and if we believe that the core value for these machines lies within the most essential needs that they are striving for, then anything that is enabling them to meet these needs and to meet this economic demand is that I would put my money in, right? So specifically, anything that creates energy efficiently, anything that is able to fuel and power this machine economy down the line. Then I think complex, but definitely something I would look at, and I do actually look at, is obviously in the robotics realm. I think it's interesting. There's different indexes, right, that offer access at scale to these companies. Obviously, the ones that are listed are not the ones that are most talked about, and it remains to be seen how like some of the robotics companies, humanoid companies specifically, do once they actually become publicly traded. But I do think that there will be winners in that category, and those who will win in that category, they will see, even from the insane valuations that they're traded at right now, they will see exponential growth. And then secondly, and that's only me personally, right? I'm a fan of taking infrastructural bets where I feel like there is people behind it that also have the endurance, right? Teams that have the endurance. I think it's, of course, Peak is one of those. Me personally, obviously, being part of the team and fully believing in this vision, I have to say that, obviously, and I do say that with full conviction, but we are not the only ones, right? Like, there are other teams that have proven out there in the past that they've went through cycles, that they've went through also very difficult periods as companies and protocols, and that they managed to bounce back. And I think this is very important, because I do think we need to accept, and also when you put your money into something right now, you need to accept that the truth that you have today might be completely, and the skill that you have today might be completely irrelevant tomorrow. And only companies that can transform and that, again, have the flexibility to react to these changing and shifting environments, those will be the ones that will succeed. And then success, obviously, will mean huge economic upside. So I know it's not a very tangible answer, and I really struggle to give tangible answers there, because
Sure.
you know how these things can go in both directions. But I really think things from first principles, and to me, I prefer to put my money in investment opportunities that are derived from these types of first principles.
Makes a lot of sense. Let's talk a bit about, I guess, what Peak is putting into practice here. You have this Woon agent as, I guess,
Yeah.
a test case. You're showing it off, using it. Could you just talk us through a bit about what the Woon agent is, and how, like, you can give people a practical example of some of the infrastructure and tech that you see coming forward in the future?
Yes. So Woon is an interesting one, right? It's an experiment that we started a couple of weeks ago, and one that is very important for us, because it kind of fulfills two different goals, right? So we basically hired him as an agent, obviously, right? We basically have him manage our social media. There is also some communities where he is already in the Telegram chats, more or less unsupervised, and basically explaining our vision of the machine economy, engaging with the community, and kind of helping to make the very abstract things that we work on more tangible, right? So that is kind of the high level thing, but there is much more behind it. And at the end of the day, Woon is kind of representing our core belief that machines will not only go into the physical worlds, they want to go into the physical world. And that is the story of Woon, right? So basically, what Woon does is he allocates capital into different types of assets. He, for example, consistently buys Peak tokens. He invested money in the robot money treasury. He now also got involved with the Ex Machina DAO, right? And then what he basically does is he's saving up for his own robot body, right? And so we use him to also do things that are not immediately tied to our core business, right? And a lot of what we do still, he's 95% automated, but of course it's not like he can just build the most complex things on his own right now. So we kind of use him to spare ideas. And for example, he came up with this idea of together with us of Robo.fund, right? Which is at the end of the day, we call it the world's first AI challenge market, right? Where you have hypothetical bets, like for example, would Cristiano Ronaldo beat Pele in a one-on-one on a 1 meter goal, right? And then there is an LLM committee that is resolving these markets. And so the revenues that are made from this platform are funneled to Woon as well, right? And so while that might seem a bit unrelated, and people might be wondering why is this almost zero human company Woon doing things that are not immediately tied to physical hardware, except for like investing in the robotics DAO or buying back the certain tokens or buying the physical machines where we have the IMOs on, then the answer is really very much tied to what I explained earlier about the machine money markets, right? I think there is not many markets for machines that are purposely built for machines, and Woon is a great opportunity to start launching these markets in a responsible way, and to really kind of bring that vision to life and make it more accessible. We're improving him on a daily basis. We're still also testing out like which LLM is the right LLM for him without like going into too much detail, because obviously changes then change his personality, and the personality is a pretty core element of what he does. But it's the first time that we can now speak to retail, that we can directly speak to retail outside of like the IMOs that we have. And there is a lot of things obviously that are coming to Woon, right? He's I don't know if you saw it, but he's teased that he's launching his own fashion brand, right? So this is coming in a couple of weeks as well. And it's especially in certain communities where maybe they're not like they're not that aware of what is coming. It's kind of translating this vision of our future in a very, very tangible way, and in a very relatable way. And that is really what Woon is all about.
Got you. Well, Martin, we do have to wrap here. I think ultimately, I'll let you answer one more question here, and I just kind of want to understand the Peak token a little bit more, and maybe the Woon token. But we see a lot of these legacy RWA platforms. I say legacy, but a couple-year-old RWA platforms, stablecoin infrastructure rails, getting absolutely gobbled up by venture capital. Like the interest to get your hands on the infrastructure here is just so abundant. I think we see the same thing with robotics, probably in the next couple of years. With that being said, could you just leave us with this? What is the utility of the Peak token? And is there a reason people should be buying it? Can you explain to us in as quick as you can, the Peak token and Woon for us, please? Woon token.
Yes. So let's obviously start with the Peak token, right? So obviously Peak right now has multiple different utilities. It's still part of it's still like the settlement token for the Peak chain, right? So basically the token that is needed in order to transact within the layer 1 blockchain that Peak is. It is still the governance token for the ecosystem. It gives you access to certain services within that network. But then the most important upgrade is obviously this reputation bonding, right? And so to give you a very simple idea, right now we have around 3 million machines that are active in the network, machines, and I think 6 million machines and humans, right? We are basically growing that, and all of these machines will need to bond depending on their economic weight, which means depending on let's say the value of the machine and the economic output, they will have to bond Peak tokens. So that is natural demand for the token. So let's say you have 100 Peak token per machine that needs to be bonded, then you can just do the simple math, right? When the slashing happens, and again, there will be a bigger paper that is kind of coming out in the next 2 weeks, actually. I'll leave you waiting for this. But then obviously when the slashing happens, then this money is not liquidated or put into the market. There is also a burn mechanism that is behind it, right? The tokenomics of the Peak token, this one thing that many people are not aware of, the supply is capped. right? That is something that
Gotcha.
back then I think was a bit miscommunicated, right? And when we speak about Woon was a fair launch token, right, on Banker with a fixed supply. And the utility of the Woon token itself is really that Woon consistently buys back his own token from all the revenues that he's generating, right? So it's not a complex token economy that is behind it. But if you look at it, I think the vast majority, I think 90% of the fees, or all of the like half of the non-Woon denominated fees and 100% of the Woon denominated fees, are basically going back to this agent. And he is obviously not intending to liquidate
Makes
these,
sense.
right? So what is happening here is that the more money he makes, the more natural organic demand for the token is being created. And with that, there is obviously higher activity, and then he's going to be obviously involved in many of the enterprise-related things where there is side elements of the business partnerships that we have that are more tailored towards him also down the line.
Okay, well, Martin, we appreciate the conversation here. That's time. We'll definitely get out this full segment in clips, but super fascinating stuff. And I think directionally, robotics is here to stay and only going to grow. So we appreciate this conversation.
Thank you very much. Thank you, guys.
Peace. All righty, Josh, welcome back. We got Matthew in the waiting room. We will definitely pull him up in a second here as soon as possible. Appreciate his patience. We got open grading coming on in a second. That was just peak. Hey, Josh, how's it going?
Good. How you doing?
Doing good. I think you're connected to the wrong mic though.
Okay, I'll get that sorted. Sorry, guys. Is that the earlier? All right, there we go.
There you go. All right, guys. Well, that was peak. Like I said, let's get Matthew on here talking a little bit about open grading. Obviously, they just had an ICO. We're in a turbulent market, and we've seen ICOs really, really struggle. This was a shining example, I think, of a very successful one recently. So it's a pleasure to get you on, Matthew, and talk to you a little bit about open grading and just get the full picture here.
Hey, thank you so much for having me. First of all, super excited to chat more about what we've been working on for the better half of 2 years. And we've been thinking about this problem very, very early on before kind of the crypto AI narrative even took off, and we've been building. And yeah, obviously the launching of the Open Gradient token was a huge milestone. But a little bit about myself. I'm one of the co-founders of Open Gradient. I met my co-founder Adam in New York about 2 years ago. We started building Open Gradient. My previous background was I was a research engineer working in quant finance at 2 Sigma. My co-founder was an AI tech lead at Palantir. And the idea behind Open Gradient is actually rather simple. The thesis is, similar to how financial transactions are going to settle instantly on the blockchain, we think that compute and more importantly, verification of compute should be settled and verified instantly on a decentralized ledger. And the reason for that is because we think it's important as AI deals with more important user data, sensitive, confidential user data, makes critical business decisions, that we're able to check that, hey, is the right data being fed into the right model to generate the right outputs? Is the right program being run? And this gives us the guardrails and the ability to actually guarantee and verify that the AI is actually doing what it says it's doing. And when you license an agent to when you pay it for it to do something, that you're actually getting what you're paying for.
Well, thanks for the introduction. The backgrounds from the team are incredible. It sounds like you guys have some really good credentials, I think, to make this happen. So, thank you for that. With that being said, I mean, you talked about the problem here and the gap. Could you kind of dig into that a little bit more and just, really explain how you guys solve for this?
Mm-hmm. Yeah. So the problem itself is actually very simple. Most people think that in the near future, 3, 5, 10 years, most of the work and productivity being done in this world will be done by AI. Your accountant, your portfolio manager, your doctor potentially will all be using AI, or will potentially be AI agents. And the goal here is you need to have some level of transparency and verifiability and also safety for this, for a couple different reasons. The most important reason is, of course, you want to keep your data secure, right? OpenAI, Anthropic, they've come out and said, hey, if the government subpoenas us, we'll actually hand over all user data unencrypted to you. So Open Gradient builds technology. Again, I'll dive into that. That makes use of the confidential computing capabilities of trust execution environments to actually keep user data secure and confidential. Secondly, is when you pay an AI agent in the future, whether it's an AI agent that diagnoses you or generates a research report, you want to ensure that you actually know what's going on, right? If an AI agent says, "Hey, we're going to use Opus 4.6 to generate a research report," they can actually swap out the model and use Haiku instead, and you would be none the wiser, right? But verifiable compute gives us essentially a cryptographic hash of the image of the program being run in TEs, so you can actually go and verify, hey, is this actually being done by the right model that I paid for? So it prevents people from cheating you out of your money. And overall verifiability, for compute allows these agent technologies to actually get to a place where it's secure and where people can actually trust it with both critical business decisions as well as their sensitive user data. So now I'll do a little bit about how we solve for this. We've engineered blockchain architecture from the ground up to allow for the EVM to be able to verify TE remote attestations and ZKML proofs. So we do something, it's essentially node specialization or a flavor of it, where we have fewer powerful computing GPUs and TE nodes that do the inference, that do the heavy lifting, and they generate these attestations that are then widely validated by a larger decentralized set of validator nodes. So this way we have more concentrated computing and proof generation and more decentralized validation of those proofs to find a nice trade-off between scalability and decentralization as per the kind of blockchain trilemma. And on top of that, we've also built all sorts of unique tooling, including a Python SDK that allows developers to easily work with our technology. We have a block explorer where you can see all the transactions coming through. You can go pull proofs and validate them yourself if you'd like to. We also have a model hub, and today we believe it's the largest decentralized repository of AI models, with about 5,000 models, many of which we've created for like Web3 use cases like spot forecasting, vol forecasting for crypto. We support all sorts of models from our modeling partners, including AI models for evaluating validator performance on the Filecoin network. We also have host sentience LLM models. We host like Pons, graph neural networks for detecting Sybil account addresses, and so on, so forth. So we've built a lot of these like novel, technologies and tooling around the core infrastructure. If you go and you click on Explore Models, you'll see some of the interesting Web3 models that we have.
Hey, Matthew, and I think everyone kind of agrees that there's a lot of fake parts of the internet today than there was 5 years ago. And it feels like, am I talking to a human? Is a robot? Like, what's behind the query I just made? And there's a lot of kind of skinned and wrapped different services around some of this stuff. I think everyone kind of feels that, and so what I want to know is like, if you have a like specific example of like where this has been a problem, where it's like, wow, if we don't solve that, in a couple of years from now, we're really going to be cooked, on that. I don't know if like you have like a specific kind of, either someone's doing a financial transaction, they don't trust the model that's giving them advice. Like, I don't know if you could kind of like, dive into a really specific example of this.
Yeah, I think there are two things I would bring up. Firstly is like you actually see these like cracks start to appear. It is true we haven't had like a huge watershed moment where people are like, oh my God, we are absolutely screwed. But there you see a lot of small problems arise, right? And as an example, like people have complained, and you can Google this, right? It's public, publicly documented, where people were using Cursor, the AI coding IDE, and they realized, hey, like why is my model starting to reason in Chinese? That's because they started using Chinese models on the back end, and they didn't disclose that to users, right? In a world with verifiability, you can actually go and verify these things, and also this, even big partners or even big players like OpenAI and Anthropic have been getting a lot of doubt where people are like, hey, are they quantizing their models before they release a new one? Why is like the model performance degrading? Are they like doing a bait and switch on us? And the thing is, nobody knows, right? People can only run their own benchmarks and make these suggestions as to, hey, like if I'm paying for Opus 4.6, I want Opus 4.6, the same model that I was paying for before. And people like run these benchmarks to actually show there is a quantitative some level of degradation. And but the thing is, like, people can't actually prove it, right? It's just people run their own benchmarks. And
And
I think over time,
why would entities, so either me as an individual user or me as a corporation, why would I care what model? I just want to get an output, right? But in your world, why does it matter what version it is? Is it because they're grifting on the cost of the model and kind of skimming a margin there? But what's the real
exactly.
reason?
Yeah, it's 100% cost, right? In a world where
Okay.
inference is going to, rapidly rise in demand, and AI is going to be
Yeah.
used for everything. You can imagine like that compute spend. I mean, you've seen the headlines, right? Compute
Oh my
spend is
gosh.
just going to the millions, billions,
Yeah,
trillions.
lay off your 100K engineers, but spend 200K in tokens. Yeah, I got you.
Yeah, yeah. In a world where you can save like 30% margin on that, that's a ton of money, right? And the thing is, like, people can actually verify it, right? If I can, run a smaller distilled model, I can run a quantized model, I can swap it out for a different model entirely. And again, people can prove that, I'm switching the model out. And this has very, very dangerous potential downstream implications, right? You might
And
imagine, like,
before we get
AI.
to those dangerous ones, to cap the expense one, I think in the supply chain world, it's like if you can save, in efficiency somewhere in your supply chain, let's say in the physical context, like a hospital, for instance, buys hundreds of millions of dollars worth of product every year. If they can save a few percentage points there, they can really improve their margins on the bottom line. I think this is the same type of scenario where we're getting smarter about the supply chain of the output that we're getting and that chain of custody of like, okay, who was the provider? What was the model? What was the cost of the model, et cetera? And you guys are providing kind of that end-to-end ability to audit that. Is that a fair description of the problem?
That is exactly what we're
Okay,
doing.
great.
And
Now
again,
you can
like,
get into the scary part, but yeah.
yeah, the difference between like what you described and this is in a world with a physical supply chain, you can actually take the product, right? Someone's saying they're selling you pure aluminum or whatever it is. You cut it open, you can actually verify that. There are ways you can actually check, right? But with AI, they're again, today it's a black box. It's an API call. You get what you get back, right? And you can't prove that they swapped out the model. These things are non-deterministic by nature, and what you can really do is just trust them, right? And again, the downstream implications here, I think today are not as serious as they would be years from now, where AI is going to be doing almost everything, right? I mean, I don't think this is not a contrarian take. It's a very much a consensus take by now that people think AI will be taking over almost every single industry, almost every single vertical. And in that world where AI would be diagnosing, disorders or diseases, or will be handling legal paperwork that could determine the outcome of a person's life, you want to ensure that there's some level of verifiability rails to it. And I think, that's what motivates us to keep building what we're building, because we think that this is as important as HTTPS is to the internet, where, everything should be encrypted, secure. There should be some verifiable trail. And of course, like, I imagine on the user side of things, you want to ensure you get what you pay for, and that you're able to keep your data secure, encrypted, and not.
Let's talk about that user, because I'm curious who you're pitching this to. Are you going to businesses and saying, hey, I can, reduce your token cost by 20% by verifying it? Or who's that end user? Is it the consumer that says, hey, I want to know what model I'm using and verify it? But yeah.
Yeah, so today it's mostly developers and teams. So
Okay.
they are directly using our infrastructure to build applications that leverage AI, and for them it would be fully secure and verifiable. We've also built some B2C apps ourselves, including kind of like memory empowered chats. We've built some like cool DeFi AI empowered agents where people can swap, and of course all this is powered by our infra, so everything's verifiable and secure, and they can actually see the proofs and attestations being generated. But the goal is to keep expanding this, right? So today, I will say a lot of our users or our clients are kind of developers building in the Web3 and AI space, just because on the blockchain it's just a very adversarial environment, and you need security. And most Web2 players, I would say, choose to trust OpenAI and trust Anthropic, that they're not going to essentially screw them over. But I think it's only a matter of time where these standards will just become relatively important for web security and compliance. And again, as AI gets more and more powerful, like, it will become a natural standard, just like HTTPS did for the web. And when people realized just how important encrypted web traffic is for people, how important it is to build strong secure infrastructure, because again, when software is doing everything. You bet your ass you want to make sure that it's secure and serving your best interests.
So maybe walk me through the process then. I think you've done a great job explaining, what it is you're offering here. Let's say I'm a developer. I just learned how to vibe code and I'm trying to use Claude Code or Codex or whatever it is. And I want to make sure I'm using that model. Can you walk me through what that would look like through, Open Gradient?
Yeah, so today we have essentially like two different ways you can inference models. So one is you can go to our model hub and find like some custom like ML or like AI models. You can actually also upload your own. Many developers have uploaded their own, especially indie devs. There are certain, if you go through our docs, there are certain formats the models have to fit in order for it to work well on our infrastructure. And there's a second class of models that are private models that are run by like Anthropic or OpenAI, the different model providers. And for those, obviously, we don't host the models directly. Instead, we deploy kind of like a router program in a TEE that's secured by TLS. So this way, it allows you to actually verify the API calls. So because we don't host the models themselves, we can only prove that we're making the right API call to the right model provider. So it's a mix of these two kind of approaches. And you have a Python SDK, or you can directly actually invoke these models by inferencing them directly on chain. They're smart contracts on chain endpoints, and essentially you pay for it via the X402 protocol. And then you inference the model, you get some results back, and then you can also use the SDK to actually pull the transaction hash, and you can find the proof or the TE remote attestation associated with that inference, and then you can actually go and verify yourself. So I would say today that's kind of like the developer workflow, which is integrate the SDK and you verifiably inference these models, and you can optionally go and check the proof yourself. I think the next step that we're trying to take here is to make this a bit more seamless for application developers. We want this to again kind of look like HTTPS. So when you use an AI agent, you shouldn't have to pull like these proofs and attestations to check it yourself. You should be able to like have it be, we should run, keepers or bots or something like that verify these proofs on an ongoing basis. And you can actually see like a green check mark in your browser or something like that when everything checks out. So we're just trying to make it a bit more seamless and accelerate on distribution here.
Yeah, and further on that, I guess like trying to understand the TAM of this market that you're trying to address here. What is the size of this market? Obviously, you talked a bit about the end user and the different types of people that those could be. But could you walk us through, I guess, the economics of the company, and then maybe like how big this market truly is?
Mm-hmm. Yeah, so when people think about inference, I would say similar to, again, software or any other industry, not everything necessarily has to be, verifiable, right? And I probably serves against my interest to say this, but it's kind of like transactions, right? Not every single transaction needs to be on chain. Even if a lot of transactions do move on chain, there will be plenty of transactions that will still go through traditional payment rails. Cash will always be a thing. But I do think like the inference and verify, AI computing market is already firstly very, very huge, and it's going to grow well into the trillions easily over the next couple of years. With that said, of course, if we can capture even just a couple percentage points, high impact use cases for verifiable inferencing for larger, open source LLMs, as an example, like, a couple percentage points would still easily put this in, multi-billion-dollar market. And I think that's still expected to just grow rapidly from there, just given the fact that, as we touch more high impact use cases, as we touch more critical business decision type use cases, more sensitive user data being dealt with, this all becomes increasingly more relevant.
I think this is a tale on one side. Yes, this market I think could be very big, but you almost need this tipping point where like you said, there's that event that says, okay, this is critical middleware part of the infrastructure. Like, do you think it's like someone has to get sued or something for the industry to wake up, or does government come in and say, no, this is a standard? And I'm not an internet security expert, but like SSL was, and like it has to be incorporated with every kind of website. Like, how do you think this gets adopted? Is it by developers saying, oh, we want this good, or is it government, or is it, the legal system is suing people because they didn't implement something like this?
Mm-hmm. Yeah, so I was actually at Facebook in 2019 on Messenger. And I kind of like saw how this went down internally a little bit, where before, like people didn't really care about like end-to-end encryption really. Prior to 2018, it wasn't a big thing.
No.
And after the Cambridge Analytica scandal, of course, this was I think it was in 2017 or 2018. People were like, "Oh my God, we need our data to be encrypted," and that kind of like pushed, Facebook, especially the bad PR, right? It pushed like Facebook as well as a lot of other products to start building end-to-end encryption in a lot of their messaging apps and things like that. And over the course of the past like 5 years or so, that has been implemented in things like I think maybe like Messenger and WhatsApp, Instagram, like they all started slowly integrating end-to-end encryption. So I think it's going to be something like that, where maybe the government subpoenas like some user data, and they're like, oh my God, like some users' data is like completely exposed in court. Their messages with ChatGPT, or something like that, or someone gets hacked, right? And then once they get hacked, like all the user data gets exposed there, and people are like, oh my God, like this is terrible.
This is a real problem, actually. And there's a case in Canada where there's a shooting at a school, and they are now suing ChatGPT for, I think it's like $2 million, because the person, and it's a terrible case, but the person was talking to OpenAI or talking to ChatGPT, and it was telling them stuff about whatever their mental state, about how to do things, everything. And now we're trying to, similar to social media, where if, someone posts something they shouldn't on Snapchat, there's kind of that avenue for law enforcement to get involved and maybe ideally intervene before something bad happens. Right. So it's like, what I'm trying to kind of touch on here is like, where are we in this process of understanding the legal responsibilities of these model providers to intervene in something like that versus, we want privacy. And I don't want my personal financial data pulled out in court too, either, if something happens as well. Like, how do you think about those kind of scenarios? And I know this is a very complex question, so, give what you want here, but I just am trying to, this is something I think about actually a lot, and it's a relevant case because it's happening right now.
Yeah, no, I think the thing to this is it's such a multifaceted and multidimensional like kind of problem. Like it's a little bit more complex than just like encrypted user data on the web, or whatever. It's like there's so many ways things can go wrong, especially since AI is again getting adopted at just some unprecedented rate. And I think again, like the couple things we flagged, or user data gets exposed, things like that could be obviously disastrous in certain ways. I think the other flip side of the coin is okay, what if we didn't have a way to verify AI, and this caused people to start cutting corners when it comes to inferencing or serving computes. And again, a lot of what's scary about this is like a lot of the downstream kind of implications of this would be somewhat invisible, right? You could make a wrong diagnosis and people would have no idea, right? That it was because like they swapped out the model. People would just be like, yeah, like the AI messed up or something like that. And there's like no visibility, no transparency, and it's difficult to.
And we had the same problem in social media. And I'll kind of cap this segment with like, like you went through a Cambridge Analytica, it is actually a similar scenario. Is like, can you control society in a way by making a couple tweaks and parameters on a model or something like that? So, but yeah, interesting conversation. This is a very fascinating problem.
Well, and kind of on this note too, you guys are not in the business of verifying the data that the model puts out. You're simply in the business of verifying the model, correct?
Yes, just the compute.
Would you, is there ever an angle you guys are interested in when it comes to verifying that data? We know like these language models tend to hallucinate sometimes, give wrong data. We know there are a lot of people kind of putting up bounties for industry experts to go and I guess give really good fine-tuned data for specific tasks. Are you guys interested at all in the data output business, or completely focused on just
I think where we're getting at is like this, we're trying to understand the scale and the size and kind of like the problem here, that like how big of a problem this is. But yes, sorry, go ahead.
So you're very astute and correct to note that there are basically two sides to this, right? One is like, is the compute being done correctly? And secondly is, if the compute is being done correctly, there's still a chance that the output is wrong, right? But even if everything's done correctly, that's like a different problem entirely. And my personal view on that is, well, again, I think there are a couple different parts to it. But firstly, AI is just improving so quickly. Again, still hallucinates. There's still issues, but at the rate it's improving, I think, it's eventually going to get it's going to improve a lot, I think, over the next couple of years. Secondly, is I do think it's like a little bit of a niche / like vertical by vertical basis where different use cases of a model will just have different fundamentally ways of verifying the output, right? Like some things are fundamentally, not quantifiable, right? Like, how do you verify, like, was Trump rude to, Takaichi, right? That's like something that's purely subjective, and doesn't have like a binary output.
That's a very famous clip in the White House. I know what you're talking about.
But you know what I mean, right? There's certain things that are subjective, and then there are other things that are very objective, right? Which is like, did Bitcoin draw down in the past, like, month, right?
Yeah.
That you can actually build simple like programs to actually go pull this data and verify quantitatively and get a binary answer of yes or no. Like I think people will build these harnesses based off of the use case around the AI, and naturally, like this falls more so on the shoulders of the application and agent developers than it does on the compute providers, which is us. It is our job to make sure that you are getting the right model, the right input, on right data, right output. You're not getting cheated here, and the compute's being done correctly. It is the job of the agent, or application developer to make sure that you're using the right model in the first place and that it's of high quality enough, and you have certain guardrails around it hallucinating or generating incorrect data, and you have certain protections or means of protections against that.
So, the great answer, by the way. Could you walk me through a bit of the tech stack here and a bit more of your offerings? Obviously, you mentioned, the compute side, and it's like, I guess I'm trying to figure out where is your compute coming from? Are you, I guess, buying compute from one place, taking a bit of margin on that? Is it a decentralized network of everyone kind of putting up a little bit of compute and you guys are managing to siphon that off? Like, how does that work for you guys?
Yeah, so today we run like most of the nodes on our network are run by us. So they're the TEs, the GPUs, they're on different cloud providers. We work with some decentralized node providers as well. And part of the token launch was actually to create incentive mechanisms to help us scale on the compute side as demand slowly picks up and scales as well. Like being able to use a token to essentially pay node runners to run like H100s or whatever on our network to help scale it up is like very much like in our interest, and one of the things that we want to do to help like continue to serve our end clients well. And of course there's also using the token as crypto, like a cryptoeconomic bond. So if you generate garbage proofs, if you have like terrible uptime, you could get slashed for that as well. And ultimately the token kind of aims to tie our infrastructure services together to make it a bit more secure and a bit more reliable, because there are consequences for poor behavior on the network. In terms of services, we again like compute sit with inference. That's like the kind of most widely offered service that we have, inference on a wide variety of different models. We actually have built a couple different derivative services on our own infrastructure. One of them is secure memory. So we have some like B2B contracts and deals actually working with agents. So we have this like memory library that we've like engineered from the ground up. It's like hosted on our infra, and you can essentially give your agents secure encrypted memory. And again, I'm happy to talk about the use cases there, but it's kind of like there's base infra and then some services that we launch on top of it.
Got you. Could you maybe walk me through a bit more on the token? I mean, we see the economic flywheel here that you guys have pulled up. Obviously, you said, you're going to use the OPG token as incentives, and there's all these different angles to it. Could you kind of just give us that full breakdown of how you guys are thinking and looking at the token?
Yeah, absolutely. So we're of course using the token to bootstrap both supply and demand on our network. So as an example, if you want to pay for verifiable inference compute, that we pay for that using OPG tokens via the X402 protocol. We're going to support other kind of types of payments as well, but there are some benefits of using the OPG token, get certain discounts on inference. And then of course on the supply side, which is as demand ramps up, we want to incentivize people to come run nodes on our network. So you can get paid to run nodes, GPUs or TEs, to host models on our network. And of course, the other like side of things, very standard token stuff, which is it's also used for things like governance. It's used for things like rewarding model developers and application contributors. It's also used for cryptoeconomic security on the network. And like we aim to kind of use this flywheel to bootstrap both demand and supply for verifiable inference on our network.
So, question here. We're familiar with Venice. I'm not sure if you're familiar with
Of course,
Venice,
yeah.
but okay, yeah. So they have a very interesting ecosystem. I'm seeing some similarities in the protocols. Would you guys say that's a sort of a competitor of you guys?
Yeah, I would say, we're in a similar space. I will say kind of like the end use case we try to tackle is nuanced in a little bit of a different way. For them, they're very much focused on confidentiality and privacy. For us, it's a little bit more focused on verifiable compute, and generating TE remote attestations that are posted on our blockchain and making that accessible for everyone, right? Supporting, not just AI models, but any machine learning model that you want. So we're more focused on kind of like a full stack infrastructure platform for any model, verifiably inference. And you can see that on the Blockchain Explorer. And one of the, last thing I think is very, very important here is that I think this will power the agentic economy in the future and agentic commerce, right? When agents don't have reputation today, right? When you pay an agent to do something, you trust that it's going to do it, right? There's like really no repercussion if it doesn't do it. And you need some kind of verifiability rails to ensure that if you pay an agent to do something, it does the right thing, and you should be able to verify on a blockchain that that's exactly what it did. And without that, guarantee, commerce can't happen, in our opinion.
No, super valid answer. I also kind of want to talk about this TGE you guys just did, how that's been received. At the start of this conversation, you mentioned, you've been working on this for 2 years, and it's been a long process to get to this point. Maybe help us understand that. Could you just walk us through, briefly the last 2 years, what that's looked like, and then bringing you up to TGE today, and working with awesome listing partners and getting a ton of attention out the gate?
Yeah, it was quite interesting because when we started building this, this was like start of 2024, people were kind of like, oh, like why are you, what's AI and blockchain, right? Like, does this merge actually make sense? And when we were pitching investors, like end of 2023, early 2024, most of them kind of were like, like they didn't really see it until I think like maybe Tao started taking off, and then all these investors started coming back to us, and they're like, oh, like we see it now, which is quite interesting. And I think it's also helped us kind of like see the larger picture. Initially, it was very, very focused on, I would say, more traditional machine learning models. So this was using ZKML primarily for DeFi. And then my kind of co-founder kind of started stewarding the kind of like turning of the infrastructure into a more generalized AI computing layer, given his experience working with AI agents. And he's like, yeah, this is actually not just important for DeFi and machine learning, but it can also be used to power agentic commerce. And we need to be able to ensure that we can verify what an AI agent is doing in order for commerce and economic productivity to really scale.
Got you. And then this TGE you guys just had, can you talk a little bit about some of the backers there, the raise details, and how that's been received in general?
As well as your tokenomics breakdown.
Yeah. Well, so on the backer side of things, very, very excited to be backed by, great investors that have, been with us for a long period of time, working through thick and thin over the past 2 years. Again, like, A16Z Crypto, Coinbase Ventures, SVA, lots of great, angels, Anon from Canonical.
Wow.
Shout out to a lot of our, angels like Ilya from Near as well, who's been very much like a close, mentor and also a good brainstorming kind of partner. And Near AI is also working on a lot of the kind of similar, missions, and they're taking on the same problems as us. And, having these people on our side of the corner has really helped us kind of get things across the finish line. And in terms of the tokenomics, I mean, I don't have the numbers straight off the top of my head, but we tried to create it in a way that was, equitable and fair. And I would say, like, generally, to me, I think everything's been somewhat well received. We also understood that the market conditions were, a little bit turbulent when we were launching. So we tried to launch at a low valuation, and since then it's kind of been going up from our launch price at least. And
yeah, it's done well.
Yeah, and of course it's only been a week, so hard to say where things will go. Or we're always just one Trump tweet away from complete market Armageddon.
Come on, Matthew, we're doing good now. Let's
yeah, don't jinx it.
Don't jinx it.
Yeah.
Can I ask a bit of, so your tokenomics breakdown seems like there's a large ecosystem element here. Can you maybe just talk about how you're incentivizing either developers or what the kind of use of these tokens are, how you foresee them being used to grow the ecosystem?
Yeah, so for us, it's a very dynamic allocation that's going to be flexible and change over time. But like I mentioned, there are kind of like it's like a multifaceted thing. There are different types of things we want to incentivize, including, again, on one side you have like model developers, agent developers who build models and upload them to our to our model hub for people to use. On the other hand, you have like the node providers, right, who are running and providing the infrastructure and the compute that actually make this network a reality. And again, like we've kind of like decided to keep this like dynamic. And again, since there is no token inflation, the max tokens are capped here. We're going to like slowly release this over the next 8 to 10 years, and allocate it in a way that helps us scale. So if there's, let's say, bootstrap, if there's like a bottleneck on like compute, and there's not enough compute to scale with demand, we're going to incentivize that more heavily. If people are fine using the existing set of models that we have and don't have much more demand, we're not going to incentivize that. It's kind of just like a discretionary approach to incentivizing what will help us scale most quickly.
And can you talk us through a bit of the you don't have to speak about your burn rate, but just your runway here? How long have you guys like set aside here based on the funding you have? Are you looking good to keep building this for the next 6 to 12 months? And maybe talk us through traction as well. I see you have some good traction.
Mm-hmm. Yeah, so we're very financially healthy. We have like ample amount of runway. We part of that has to do with the fact that we actually generate some level of revenue using the apps that we've built. So we have B2B contracts with via MemSync. So that's like our memory platform. We also have like a SaaS kind of like B2C app on MemSync that people can use that generates revenue as well, but a bit less than the B2B side. We have like Twin.Fund, which is generated a little bit of revenue, and BitQuant, which is like a DeFi AI agent that powers verifiable AI transactions when people can talk to their agent and the agent can swap and do things for them, and everything's verifiable on the Block Explorer. So these all generate revenue. Mostly, a lot of it has been on like the B2B side of things as well. We have a couple of contracts with a couple of like clients, and we're exploring how we can keep pushing that. Moving forward, with the token live, now we can actually make money or start making money off of compute as well, because the network can take a cut of the costs that are incurred by people who pay for that compute. But before the token TG, it was kind of powered by, the testnet token, which, as you might imagine, doesn't have monetary value attached to it. So yeah, we're more than healthy, and we can keep building this for the next, 3 to 8 years. And the goal is to keep scaling this up and up and up, start, getting more revenue from Web2 partners that we want to work with, either directly through inference and compute, or through some of our derivative services like memory.
Interesting. Yeah. I mean, you have all these apps, and congratulations on the traction. That's fantastic, by the way. Would you consider Open Gradient a research lab of sorts?
Yeah. I think we've mixed and kind of like flopped around when it comes to identity here, but it very much was like we I would say it's like in our DNA as a research to be a research studio, because we've just done so many things. We've also like engineered our own memory library from the ground up. As of last year, at some point, I need to double check if we still are, but we were state of the art on some of these long-term memory conversation benchmarks like Locomo. And we've like kind of like built a lot of this like novel infrastructure and just like built cool stuff. I think that's like kind of what we were, but we're trying to pivot into a more productized company where we push product first and generate revenue. We don't want to do research for the sake of vibes.
Yeah. No, completely fair. We have a question from Crypto Jones, and I got one more just on roadmap and where we go from here. Crypto Jones asks, how does Open Gradient make money? I mean, you mentioned a few different products here. Could you just break down some of the economics a bit further on how this actually works? And I guess then we'll reflect in the success of hopefully the token and the company for the long run.
Yeah. So again, 2 different ways of making money today. Number one is like very traditional, like SaaS style. So, we make just like revenue in terms of like cash and US dollars. So this is like, B2B, contracts. And this is also like B2C. If you go to like memsync.ai, you can actually sign up for a premium account, and, you can actually, like if to do that, you'll pay via Stripe. More so B2B revenue today, but we're trying to, of course, keep pushing B2C as well. And the other side is, of course, like the token. Now that the token is live, we'll technically generate revenue through our own token when people pay for a compute on the network. I think that's a little bit more, of a, it's like, I'm not, whether you would count that as direct revenue is different because it's not cash hitting the bank. It's kind of token hitting account address, and it's not realized revenue until you liquidate it. And we're trying to, find ways to accrue value to the token. Ultimately, we don't want to like sell the token to realize that into revenue. We want to make our, shareholders and also token holders happy and have them participate meaningfully in a sustainable way, long term in the token economy that we're running on Open Gradient. So yeah, as post TGE over the next couple of weeks, going to figure out how the money works out and how we're going to keep accruing values to the token.
All right, great answer. I guess from this point, we would just want to know what's coming next. What are you guys looking forward to? What's the crew at Open Gradient talking about?
Yeah, the next step is really not just productionalizing like and integrating the token into like our existing infrastructure, like making sure it's cryptoeconomically secure, making sure like the token is actively being used in our integrated into our services for people. The next big, like the vision and the mission that we have that has always been front and center for us, but for us, it's now time to focus on this is how do we bring agents on chain and have them actually, commercially engage with each other in a way that is productive, right? So today, like, number of agent transactions still dwindles, is small in comparison to human transactions. Agents don't really have a strong like economic or, like protocol for commerce just yet. Because again, there are a lot of issues like, barriers to trust, barriers to reputation, whether the agent is actually doing the right thing. People don't want to pay an agent that they can't see, they can't touch, that they don't know much about for a service that they can't validate, right? Like that just does not make sense to most people. And building the verifiable rails for that is important. So we're working with many different partners on this. And, one, of course, the bigger one being Virtuals on integrating, verifiability into their agentic commerce protocol in order to make, this actually secure, safe, and verifiable. So it paves the road for agents to be able to verify work, and that paves the road for a productive economy where people won't cheat each other and try to skim margins.
Ironically, we just had this conversation with Peak right before you guys came on. Have you guys talked to them? Are there any synergies between the two teams there? Or? Not sure.
Yeah, actually, one of our investors very recently connected us, and we have some conversations going on now, and you just allowed some time to chat with them. So very excited to talk to them. I know they've been kind of tackling a very, very similar problem, as this. For us, it's kind of like been an exciting journey. Working with a lot of close partners who, are also very much thought leaders in the space, like Virtuals, and working with them, kind of seeing how they think about the problem space today, seeing how we can lean into their synergies and our synergies to create what we actually envision together has been, it's been super exciting. And again, we're more than excited to talk to Peak.
Love it. Okay, Matthew, leave us with this then. Crypto Jones asked another great question on kind of go to market here, plan to scale. You guys have the gold here. Now, how do you take it to the masses? What's the game plan here for marketing and scaling and go to market?
The great part about working on this now is that when we started this a year or two ago, people didn't really understand it, and people were kind of like, hey, do we need like our agents, going to be on chain? Why are agents going to be on chain? Like, why are they going to transact on chain? Like verifiability, like, does that actually matter? The great part about building this now is that it's no longer kind of a contrarian take. Most people kind of understand why agents want to transact on chain because it's seamless, it's secure, like you can get your money instantly. You don't need KYC, you don't need all these like barriers. And now that people kind of see it, they're like, okay, well, why aren't agents transacting on chain, right? You have all these barriers, and we're trying to fix that. So from a partnerships and scaling perspective, what we're really trying to do is, of course, we've been working with a lot of Web3 companies. I think like the next big thing is to establish a very clear compliance standard for verifiable compute. So we're talking to like Near and some other partners to try to build something here. And then integrating that across many different partners, right? So this is like a standardized approach to using verifiable AI, like HTTPS, right? There has to be a way for people to, run these things. And we're like, okay, yes, this is compliant and standardized and verifiable. So mostly Web3 partners first. And I think people are starting to think about this from the Web2 side as well, especially with these recent cracks that you guys that we had talked about prior, people are starting to realize that, hey, how do we actually ensure that we're getting the model and the compute that we're paying for?
Yeah.
I think that's going to pave a wonderful road for us to integrate into more Web2 AI agents and AI companies.
Well, thanks so much, Matthew. This was a fascinating conversation. We're looking forward to your development and just watching this thing scale and grow. Watching more of the products you guys decide to spin up, as well as how this open gradient network just plays out in real time. So it was really a great conversation. We'll be looking forward to hopefully speaking again, maybe with some updates in the future.
Yeah, absolutely. Thank you guys so much for having me. It's been great talking
Likewise.
about some of the things we're excited about, and really appreciate you guys.
Yeah.
Very cool
Cheers,
stuff.
Matthew.
Cheers.
All right. There we go. Two similar conversations today surrounding
Very deep tech, very deep AI.
Yeah, very deep AI. I think we didn't have, we wanted to respect his time here, but I would really be interested to dig, I guess, independently into a lot of these other applications that he mentioned, outside of the compute network and verification layer that they're building. It seems like they have some really good, B2B, B2C products that are kind of spinning out of this AI lab that they've built up. So cool conversations nonetheless.
Yeah, it's been a
Vision,
theme in the
incredible.
last kind of like 3 months that we've talked a lot about this verification and stuff, and
It is.
it's still a little unclear like what that final model is and who wins at that. I also kind of struggle with this concept around like, we talked about agents in AI 1.0 at the end of 2024 and 2025. But like then Google and Microsoft and et cetera started also talking about agents after it was kind of popularized in the Web3 arena. And I'm sure they were always talking about agents, but now they like publicly were like, okay, agents are something everyone's ready to talk about. I also wonder like how much is this like a crypto only solves this type problem versus like how much of it the big hyperscalers just like find a solution for this themselves, right? And I grapple with this always when I'm looking at these kind of crypto AI projects of like how much of this just gets built by the big boys, and maybe it doesn't. Like maybe it doesn't at all. But yeah.
Yeah, interesting thoughts. I think one thing is true that they started building this 2 years ago, and it seemed like all like he mentioned, all the VCs kind of struggling to grapple with this. Just I think even like some people still are today. But clearly this vision has played out really well. Smart guys.
Yes.
From the open
Yeah,
gradient side
absolutely.
and from the peak side. Like I think both have very good visions on direction where we're headed.
Yeah.
So yeah,
I like the machine capital markets thing. That was the first time I'd heard of that. So I did like
yeah,
that.
and the best way I could put it too is like positioning for this feels like positioning, 2-3 years ago, like people were doing for payment infrastructure and banking infrastructure with stablecoins. And we're seeing
Yeah.
how those are just getting eaten up. RWA infrastructure just getting eaten up by these VCs. So I think in a couple of years we see the same thing for robotics. But
Dom,
yeah.
can I ask you? You have a new shirt on.
Oh yeah, I do, Josh.
Can you show that off?
I sure can, dude. Let's go.
Okay. All right.
Let's go, dude.
Well, guys, we're trying a little something out here. We're doing a version of the shirts for Miami. You got Collector and Crypt, Swarms, Easy A, Meteora, Trojan, MCG Miami 2026, at MCG live there with the gem, which looks actually sharp. So we're still we're locking in on our merch still, guys. So bear with us. But yeah, not bad. Not bad.
It looks cool, bro. I like it.
Yeah.
And we got, of course, Collector Crypt. Number one in everyone's conversation right now is Collector Crypt. So grateful for their sponsorship for this one here.
Yeah, absolutely. Shout out Buddha there at Collector Crypt for making that happen. So appreciate you, bro.
Nice shirts here. Here, let me also, I got you guys. Let me get some previews for you.
Yeah, and guys, the shirts at Met Dobby went out quick. Like the MCG shirts were hot, so we were giving them away. That we got them in gray so that we could wear khakis. But hey, maybe we'll wear with a beige, like black pants or something. But either way, we're trying something a little different than the green, the black. Trying to come a little fresh at whatever. And I think, Dom, this is consensus, so it's going to be a little more formal. We might have like sports jackets on or something, or like a little blazer situation. But yeah, look at this guy.
Got a whole bunch.
the
So
merch.
slide through. We'll hook it up for the boys.
Yeah. Very, very select people are getting these because we got to keep a margin here.
Yeah, these shirts
Dom
were not
Lemon
cheap.
didn't make the shirt. You know what? Crypto Jones, Dom Lemon is in our back pocket. You know, that's for when we really make it.
Oh, yeah.
That's when
Yeah,
we really, really like pull the Nelk boys and like do like a merch drop. We'll bring out the Dom Lemon.
But it's a good shout there. We're gonna have to. Yeah, it'll be for the OGs. It'll be a very limited line of Dom Lemons, and
yeah.
But nonetheless, dude. Okay. Firstly, I will say crypto world seems to be getting put on the back burner. And I just want to talk about it a little bit, bro, because Nikita Bohr here decided to release this update where you could snooze things. I don't think it's a bad update, but look at this. The most snoozed, i.e. muted topics since launch of the snooze feature are crypto number 1, politics number 2, Iran conflict number 3, sports, business and finance, gaming, artificial intelligence, videos, which we do crypto and videos, and politics, and business and finance, and entertainment. What the heck is left on Twitter? These are the top 10 muted. What the heck is there beyond this list? Does anyone know?
No, but I think the doesn't surprise me. The most annoying people outside of politics in a bear market are crypto people, low key. So,
well, someone made a good point about this. It's like, okay, you're muting the crypto right now, and when you rip to all-time highs and it starts getting buzz, you're going to unmute it just to top last, and it's going to be this perpetual cycle of never being early. And nonetheless, MCG is getting muted over here because we talk about crypto, business, finance, and artificial intelligence.
It is what it is.
I will say, though, I scroll through Twitter today, and my Twitter feed is all videos, all images. And like, I think back 3 months ago, it used to be, I mean, it was just tweets. There was no video content.
Yeah.
There was no image content.
Breaking news.
Yeah. Now it's just completely a different platform. So I just thought this was crazy. I really don't even know what the heck people come on Twitter to do. Are you just watching clavicular? I guess like this is
brain rot.
Banning videos. Like, what do you even watch anymore? But you know, I digress. Anything interesting that's tantalizing you, Josh?
Galaxy Digital, man. I talked about Galaxy. It was $22, $20. I've been talking about it since it was $17 2 weeks ago, 3 weeks ago. Galaxy today is hitting, what is it, $28?
Oh yeah, it's bumping. I did cover it pre-show.
Dude, Galaxy is absolutely rip city. So there you go. And for a $10 billion large cap stock to, I don't know if you call 10 billion large cap these days, but
no, these days, right?
For a stock to have this, nice move, I think it's really exciting. So, two catalysts are going to be the Clarity Act and some of the stuff that will really benefit Galaxy's business. And one of the concerns was the commercial banks that they might compete with companies like Galaxy and the other crypto companies out there. But what Mike Novogratz says is the conversations went from a competitive conversation to more like, hey, can we integrate your services, white label, and do things that way, which is good for the crypto native businesses. Because there's this kind of ongoing theme that these Web2 finance companies are just going to build their own blockchain systems and just kind of sidestep what we've been working on for the last decade. But it appears that's not always going to be the case. And then the second one is just the data center. Again, that video I played earlier this week had like 1.5 million views for a corporate data center, for literally a video of a data center, but really showed the progression of moving from Bitcoin mining to HPC, or high performance compute, which is providing training compute and inference compute for the large companies. And when they talk about doing deals here, Galaxy is talking about companies, they're signing deals with companies with multi-trillion-dollar market caps. Well, we know there's only like a handful of those businesses, and really excited. And some of those are going to be announced in very near future, according to Mike Novogratz. So again, was really banging the table on this. Obviously at $17, it was hard to get super bullish this because the chart just looked like it was getting dust owed. But I think this is starting to catch on. And Yeah, my only equity holding. I mean, I'm all in on crypto, all
Wow.
in on AI, and my only equity holding is this beyond the robo advising. I have a good chunk of net worth just in index stuff, but my only single stock holding is this. I just concentrate down. Again, it ripped from $4 to $50 in the 2023 to 2025. They've done they're $60 million into a $200 million share buyback program. So there's another $140 million of discretionary buybacks that they're making on this stock. Yeah, really, really great name here.
So notice what's interesting here. I mean, Galaxy's up 4.3%, Circle's up 8.5%. I'm wondering, I mean, well, of course there's some relevance, but Bitcoin's pumping. And obviously people I think are, whenever Bitcoin pumps, you get outsized returns on some of the crypto adjacent projects like Galaxy, of course, and like Circle. So I think that's also part of the pump today, but Bitcoin's looking good.
Oh yeah, it definitely is part of the pump for sure.
I think honestly, this category of crypto companies trading equity is actually just as interesting, if not more interesting, than actually trading crypto. Because I do think,
state of on chain
so rough right now. Like I would actually rather buy equities on publicly traded markets rather than go on chain and buy crypto. So yeah, it is a really interesting angle here to hold Circle or hold Galaxy Digital, because I do think the gains are kind of going to be outsized. And I think, of course, we talked about this earlier, these companies are probably being held down, I think, just because of their crypto correlation. So interestingly enough, though, let's look on chain, because Ansem made this tweet earlier today.
Yeah,
I want to cover it. Firstly, Ansem and crypto banks started, or not crypto banks, Ansem and banks, phase banks started a show like this. It's an
the
MTG.
bubble. What was it? The bubble podcast, something like that.
The market bubble, I think it is. Did very well. Again, like, is this local top for streaming? Who knows? But Ansem and phase banks went ahead and did that. Really good production. I don't know exactly like what they're going to be talking about too much, but it's every Thursday. Nonetheless, Ansem, for the first time I've seen in a while, comes on and publicly shills basically Pumpcade. He says Pumpcade focusing on deflationary tokenomics built around platform activity. All usage metrics will directly benefit the token. The concerns around the equity/token split was misguided. Team wanted more of the tokens because they intended it to be a core part of the platform launch. And of course, he's quote tweeting Pop Punk's TLDR on Pumpcade, which we talked about yesterday, right? And I'll give you guys some context here. This is a TLDR of the new Pumpcade tokenomics that are released. Of course, we know they're using the ACE model, which is safe notes. You can swap tokens for equity via safe notes at future priced rounds. The Pumpcade token system in 60 seconds. So Pop Punk says the Pumpcade value engine sits at the core of the platform and routes real platform activity into areas that strengthen the ecosystem. So there are going to be Pumpcade burns. There's going to be user redistribution. There's going to be creator rewards, right? For creating markets, you can get rewarded. And then there's going to be, of course, their user acquisition. So that's the value engine behind Pumpcade. They got the equity tie now. They also got the token economic side. There's this thing called congestion fees, which improve market quality by making it more expensive on a curve to join the safe side of the market. So, of course, if someone's at 70%, the Steelers are set to beat, the Eagles at a 70-30 split or whatever. Joining the safe side actually comes with a bit of a cost here. So joining the safe side of the market, the closer it gets to ending, these fees route into the Pumpcade value engine. So there's congestion fees, which is interesting too. As we see like things like MetaDAO, we know that last hour is when everyone starts kind of investing in this raise. Might be the same for markets that are closing here shortly. There's a bit more congestion on, so they take an extra fee on top. Pumpcade passes are season pass that gives access to. Okay. And they're also selling these passes that give you lower fees, the ability to create premium markets, and increasing list of platform benefits in the future. So that's another.
I like the congestion fees because also stops. There's this like last second problem with automation and bots coming in and like filling different prices and stuff like that. And or like sniping different stuff. So yeah, a little arbitrage. I think it's good for the market that they're not always advantaged too much.
Yep, I agree. Yeah, this is interesting. Of course, like you're going to have these ARB bots come in naturally. And if there's a 10% ARB when a market's already been resolved, they're going to go and take it. If they're charging 5%, at least they get some of the economic upside of that. So interesting. Also, so USDC is bought into the platform equals market buys the Pumpcades and then burn. Pumpcade users receive a discount and platform burns it. So Pumpcade has no tokenization and no farming.
What I find interesting about Ansem posting this is like, if you watch the stream yesterday with Banks, it's like Banks asked him about like, what are you looking at in crypto? And he just laughed.
Nothing.
Like nothing, basically. And
he said he holds no Solana, no crypto.
Yeah. So I think, yeah, like this is as much of him investing in the next bullpen, which is his that's his little trading app here, and being involved with the ecosystem again, than anything. But I don't know. I think it's a good start. I mean, you need to create things like their program to attract people back to the space, and it feels fresh, feels new. I'm all for it. And then they go down and they say, well, who's actually talking about projects I really care about? Who talked about it first? Well, obviously it's MCG. So then they start watching our stream, which is Monday to Friday, right? So they're only once a week too. They're going to do like the Kobe thing, like once a week, which is great. I mean, that's awesome. But if you really want to find out about projects that are moving the markets, it's us. I want to talk about 3 tickers. So can we show Pumpcade actually? Because Pumpcade's been doing really well. Do you mind throwing that up? And then really also let's do the ones from yesterday. There was a couple projects from yesterday that they're doing.
So we got to cover Orgo. We got to cover Litcoin. We got to cover Pumpcade. We got to cover Clad. We got to cover cards. Those are the ones we definitely have to cover. Outside of that, just feel free to drop them. Yeah. So this is Pumpcade. Again, it had this massive run up. Massive correction. I mean, literally at the bottom, I said, now I didn't buy any Pumpcade for context here, but at the bottom I said, I would be monitoring this here because all these wicks, anytime these wicks come in, it kind of is showing me that there's some people out there that know what the fair value is based on the previous raises. And every time we get below, there might be an arbitrage opportunity. I'm wondering who's buying these in size. And we saw there was some pretty big size. I mean, $1 million+ of token was bought and swapped to equity or safe notes. And a lot of that happened down here. And then, of course, even recently had this dip and kind of pumped again to 32 million. Again, 32 million.
So also on this chart, I'm going to throw out April 6th was when Pop Punk was on MCG. So I just want to, can you put a little vertical line where April 6th is?
Sure.
I think it was around 14 mil was the market cap during that session. Yeah, it would have been April, right about there. And so look at that. Being on MCG, watching some of these interviews is definitely positive EV sometimes. So not every token's going to do that, but
this is one of the few that's really interesting, really. With the dynamics it's added. But so yeah, I wonder who the buyers were. Were these actual funds who maybe wanted to get filled more so on the oversubscribed round and they bought in when it actually dipped below what their peers' valuation was? Potentially. This is where the dynamics get interesting. Up here, again, the token's valued at over like $80 million basically, which is a really high for pre-product. They raised 5 million. And again, you can assume, or they raised 6 million total. So you can assume they maybe got a 40, 50, 60 million valuation in that ballpark of what their valuation is. And right now you just multiply 32.3 times 2.5 because that's the conversion rate. So, I mean, I guess I could sit here and try to do it on my fingers, but let's see, 32.5 times 2.5. Yeah. So this is right now, this is suggesting an $81 million valuation for Pumpcade at this current 32 million rate. With the exchange rate that they have, this is assuming an $81 million valuation. That's a lot for pre-product. That is a lot. Down here when we were at, I mean, it got to 13 million. So let's see.
81 million on the equity value.
81.25 million equity value at this 32.5 million market cap. Now, if you go down to when it was at 15 million, 14, 15, when I was saying, you guys should be paying attention, that was suggesting the equity at 37.5 mil. Now, again, raising 6 mil, raising around 5 mil in the recent round, I would say closer to a 40, 50 million market cap. So when this was down here at 15 million, that was giving it a value of 37 million based on the exchange rate. So again, like, who was stepping in and buying this? And I think where Pumpcade could have done things a little better is probably dropped a pitch deck and maybe some of the details around the raise, so it wasn't just an insider fest. Because the unfortunate truth of this is, if funds got in an oversubscribed round at 50 million and they were aware that 50 million was the price, well, it's not surprising that they would go and just get the exact same thing, right? Because all these funds are just buying safe notes, right? So if you were a fund, you missed it at 50 million valuation, and now you see it at 37 million valuation, you just have to buy the token on chain and convert to the equity. Well, they kind of have that edge. Whereas I think everyone should kind of be disseminated this information if you're doing this model, because
maybe a little early late on this one right now. Like when we did the stream, it was early. It was early because look at the volume. Like the volume was nothing. And then I feel like back on those wicks feels like early late, right? So
this would have been early late, I think, on a real compressed
zooming
timeline.
out, but like I'm talking more on the recent timeline. Like that there's nothing going on there. He wasn't really talking about this in the way that they are now. Like that part of the chart is that token was unrelated to what he was doing. He was maybe doing something, maybe not. But he said on that interview around this time, as it started to climb from, whatever, is like, okay,
15.
Now we're going to have this integrated into the business. The token's not going to be abandoned. Like that's when it was really like, okay, who knows this information? Okay. He's talking about it on MCG, etc. And then those wicks are really, like you said, that's where the kind of the funds or like insiders got a little more details. But now you got to ask yourself, are you early? No. Are you late? No. I would say you're more kind of late early.
Yeah.
You're not late, right? But when the product comes out and it really candles and like maybe they show a little bit of success, I think you
even
get
still, I think you're late early. Late is, okay, we're seeing a lot of success, and now it's actually starting to become a competitor to some of these poly. I know he says he's not a competitor to Polymarket and Kalshi, but volume's getting real meaningful, and that's when you're like, okay, we're in late territory. I think you're still late early. When you start seeing this come out, it'll probably take a dip because people in crypto have unrealistic expectations. It's not going to have millions and millions of dollars of volume flowing through day one. So what I think would probably happen is, we have a situation where the product actually gets released. Numbers are a little slower to start. I mean, as expected, any product that just releases are probably not going to just pop off with billions of volume in the first week. So, probably people are like, oh my gosh, this is not what I expected. We get a bit of a dip. And I'm walking through the psychological steps of this because this is how people are trading on chain right now, completely emotional and psychological. And so you get to the stage where it's like, all right, revenue's not actually doing well. And then everyone kind of loses interest. But the people that are paying attention see, okay, now you have two options from this point. Either volume starts ticking up and you notice while everyone else is fading it, or volume continues to just drift down, and the token follows. But where this gets interesting and where being early late is interesting is, okay, people got scared off, people got impatient, volume's starting to uptick. Okay, oh wait, volume's getting real meaningful. I'm looking at Collector Crypt here. Where is it? I'm looking at Collector Crypt. Okay, hey, volume's really starting to pick up. But wait a minute, now this is a top revenue generating platform. People are missing it. And that's when you're late early. And then obviously it gets frothy and you're late. So I would say late early is the play at this point. You're not early. You're not even really early late at this point. But once the product release and volume actually starts ticking up, if this happens, you can potentially get that late early trade and catch that next leg up, hopefully into a frothy top.
So I want to bring back to this because here's the arc. We saw the tweet from Top G. Now I don't know how legit this tweet is. So I go asking, I say,
do you have a position in PMX, Josh?
I do have a position in PMX, basically right here, bought it at around 800 something K. It's just like not a lot, but it's enough that if this is real and there's something here, great. So there's 7 markets, and when I first looked at this, it was just this test market. And
it's a good example, by the way.
One of these markets was posted. But then, a couple days later, it's the NBA playoffs. There's Boston won. And there's, I'm not going to say this is a polished product. And what I've heard is that they're still working on this. And I would like this to work a little better. But there is some volume starting to kind of come through here. So they're clearly testing something in this V2. Now, zooming out, we've seen guys like a lot of these kind of front ends for the prediction markets. At the end of the day, they're just plugging into the big boys, Kalshi, Polymarket, etc. I'm not as excited as on those as the front ends. We also see the automation, things like Rainmaker. But what I am interested in is, can someone crack the on-chain version of one of these prediction markets and start to see some kind of meaningful volume? So I'm going to call out PMX here because I do have confirmation that they are working. The 3 months, hey, we've been cooking for 4 months, is a real thing. The product has, some things have been worked out from their V1, and now their V2 is live, and there are some markets that are started here. Look, I'm not going to say that. Not going to say this is a great play or anything, but I don't even know if the token will be involved in the future. So keep in mind, there's a lot of details that need to be filled out. But at 800K, I mean, if it is real and they do get it right, and it's a legitimate competitor, like a thing, that could be a 10, 20 in a great market, 100x.
Well, I mean, look, Bump K is trading at 35 million. It's a prediction market platform. PMX is prediction market platform as well, trading at 900K. I will say the volumes here are quite meaningless. They're very low. But what's interesting in the angle, I think, is, okay, we see a few markets popping up. Now let's watch these markets just occasionally. You don't have to be a hawk on this thing, but just over the next week, watch the markets. And if you start seeing these volumes tick up, okay, some stuff might be coming. This is kind of your insider on development of the platform. It's, okay, wait a minute. This volume's got 3.2K volume right here. If next week we see some of the markets have 15K, 10K, 15K, 20K, okay, wait a minute. Something's happening. And that's when you, so it's a good call out here. Lots of nuance to it, but you
keep an eye on this. No one's cracked on-chain prediction markets properly, and their mechanism didn't work in V1, but if they can get it for V2, great. So
something I want to talk about that's pumping. You probably haven't heard this name in a little while, boys, but Moby. Okay. Here's the lore on Moby. We worked with Moby in the very early days when they debuted their mobile app. I went on it the other day, and we had a meaningful amount of signups to the Moby platform. And so here's how the new platform looks, and they've got really up their referral system. And of course, shout out Trojan, sponsor of the show. We use them as our terminal, they're the flagship terminal of the show. But this is a trade, or interesting trade I want to talk about. So let me actually pull up my referrals here, because here are my rewards. This is my Moby screen. As you can see, this is just from the other day, right? Let me try to scroll for you guys.
So is that earnings in Moby token from trading that's happening from other people you've referred?
Yeah, and this was referrals from back when they sponsored the show, right?
Yeah.
There was about 200 something people that signed up from the show. But look at some of these rewards. I mean, they're pretty good. I mean, here, I'll just read them to you. 130, 130, 130, 250, 260, 128. Now, again, what happens here is these go to your like progress bar, and then it'll just give you a big chunk all at once. So I actually haven't made anything really yet from that, I should say, as MCG. But it's interesting. I say that because I'm on their mobile app. It's really butter. It's really butter. It's a very smooth experience, much better than it was in the early days when we had this partnership with them, but the token's repricing. And so I don't know what this means. Maybe buybacks have been really good. Maybe it's getting really good traction. I will say it's a very nice experience. And so if it is a great experience, maybe it kind of starts picking up from here. But nonetheless, it's gone from 1.5 mil to 2 mil, and the candles are looking really nice. I would just say watch it. I don't know what it means. The platform's been feeling really smooth. They've made some nice adjustments to it. Something to keep your eyes on.
Yeah, I mean,
Litecoin
something needs to compete with FOMO here and the mobile kind of trading.
Well, and the other day, yesterday, they released their base, and I'm wondering if base is getting good volume from this, and that's coming back to the token. I forget about the token economics. I use Moby every day. It's fantastic. It's really butter. It's really butter, man. So credit where credit is due. Of course, we on the show currently are using Trojan.com /@MCG. because they offer the best rewards and cash back in the game. And, I'm personally a PC terminal guy, but if I was a mobile person, like it's very smooth. I was clicking around the other day and it feels great. So good vouch here from Crypto Jones, but just watch this one because it's had a good repricing. Platform feels really good, and now they're offering base. It's at a very low market cap, and I think the token economics are tied into the app's success at some capacity. So again, if they can compete with FOMO, well, you have an on-chain option for that, and FOMO is really doing great. So just thought I'd point that out because it's up 20% in the last 24 hours.
And people are tired of FOMO too. I think there's a little bit of crime there.
Yeah, people are very tired of FOMO. Literally everyone's tired of FOMO. Like, I even saw Powell make a tweet the other day, right? And Powell is notoriously tracked very heavily. People track his wallets, they copy trade him. He said, bro, I don't want you guys to copy trade me. Now, I think this is kind of disingenuous because he makes a lot of money from people just pumping up his entries. I've made sure to never release my wallet because I don't think it's moral to have these copy traders. But he comes out and says, I don't want you guys copy trading me. I don't want you blaming me for buying a token. I want you to build your own thesis. I think that's kind of where everyone sits. Right now, FOMO has just become, if you're copy trading someone, you're probably just getting railed. You're just getting wrecked. And there's no thesis. It's just blindly copy trading and people are farming. And that seems to be the FOMO consensus. But I digress. And Moby's much more analytical, like alpha oriented. Okay, this whale's buying this. This is what's popping up in terms of volume. This is what's hot. And I think that's where Moby has its place much more than FOMO. And we might see a move from copy trading mindless KOLs to, okay, there's actually deep analytics on this platform and there's actually some edge here. So you go from negative EV to potentially plus EV. I digress. Let's talk about Litcoin. We had Litcoin on the other day. Very impressive conversation from Tekadon here. Very impressive conversation. I don't hold much on base right now at all. This is one of the coins I'm like, okay, I might get involved here. Now after this pump, this is no for me. I should have said that back here, of course, but in hindsight, everything's easy. But Litcoin, I'm not going to lie. It was a very compelling conversation we had with him. I think he's a really smart dude. He bought Solana at 250. I saw his tweet the other day. So because Ansem came out and bought at 150, he bought at 250. He just kind of quoted. Yeah. So this guy's a beast.
That's when so that was 2019. That was around their ICO. I also was buying Solana at 250, but we're just I don't hold any of it from 250, but
I hear you.
Sell it at 5.
Yeah, but the conversation with Tekadon yesterday, if you guys didn't see it, you should go check it out. Very smart guy. I think it's a very intuitive protocol he's building. And of course, it's for miners to come on and provide highly specific data for specific verticals that'll then be sold to AI labs. And you can, take that however you want. I think he's even said there are bounties on the platform for specific data. We see we see people iterating around this. I mean, you also have
I think the crux of it was paying out or verifying payouts for unique outputs. And that's kind of the unique solutions. And that's kind of the key thing is like, can you get agents to kind of swarm on each other and come up with unique solutions to different problems? And that's how you create an agent swarm where they're kind of competing with each other for the payout, similar to miners competing for Bitcoin payout, but always providing a unique solution, which is novel.
Yeah. Well, it just goes into this
and automating that, right? Having an economic incentive for that to happen was interesting.
Right. Well, it's very valuable data is what it comes down to. The data that's being created is very valuable. The only concern with Litcoin here is, since the emissions are coming from the treasury, which are boosted from trading fees, I have a feeling at some point, if there's no trading activity, the network kind of dies. It's a very hard problem to solve. And he does have a mechanism where it's meant to emit tokens indefinitely as rewards. And essentially, if agents aren't profitable doing it anymore, they just stop doing it. And that makes it more profitable for the ones remaining. We understand how that supply and demand works, which I do think is interesting. And at some point, I guess, even if it's for very little profit, if it's happening autonomously, people will take that profit. But yeah, Litcoin, really fascinating conversation with Tekadon yesterday, and it's pumping really nicely. So if you manage to, I guess, take away what we did from the conversation, maybe you're looking really good. But this is one I actually think if it does give me a dip, and if the market stays looking like this, I might position in.
Yeah, what did
Only,
we have them yesterday at like noon? Yesterday, 1 p.m. or
I
something.
mean, it simply would have been just
400K.
right there.
It's like, what is that? A 100x or 100x?
100x.
100%.
Little less, but yeah, I would say around there. Let's see. I mean, let's just say here. Yeah, about 70%. But nonetheless, really interesting. Like I said, the only concern is trading volume starts to dry up. I think this platform starts getting a lot less data coming through and a lot less valuable data coming through. And then that slows sales and all that stuff. It's a similar play to Repo, actually. Similar play to Repo. Repo's at 23 mil with an 8 million market cap. Repo, I think, focuses on human expertise to provide this data and then verification through the network. Whereas the data that you're seeing from Litcoin is agentic data via like mining and emissions. So a little bit different, but there is a mispricing, I guess, if you think this is going to be valuable. So that is Litcoin. Let's see. I also see a bit of interesting action going on with Avicii. Look at this. Look at MetaDAO in general. Avicii's been really ripping nice silently here in the back end. Avicii's been, I mean, we talked about this when they had that conversation with Cast about an acquisition, and I don't know if that fueled kind of like the bottoming out and reversal, but Avicii's back at 14 million, looking pretty good. Umbra's up a little bit off the bottom as well. I think, yeah, trending upward these last couple of days. Again, we talk about these MetaDAO projects, and they do have a floor. They do have a floor, which is net asset value. Anytime you get below that, it's probably a pretty interesting opportunity. But I will say the holders are strong for these ones. Holders are strong. Not a lot of selling pressure.
What
And then
Loyal?
Solo
What's
is down a little bit.
Oh yeah, go Solo and then Loyal.
Solo's down a bit, but it's also pumping. Pumping a little bit along with it. So let's look at Loyal, and then I'll look at Meta, because this is all cool. What does it mean for Meta? So we got Loyal. It looks like still very little volume here. Very little volume for Loyal. Okay, but Meta is just kind of bottoming out here. This looks like for a while we've been sideways. Only 16K volume here. I don't know what kind of net asset value MetaDAO has on hand, but it's worth looking into, I think, if you're building a thesis out for this. But look at how we bottomed out there. Just like we bottomed out here for MetaDAO before we had like the craze. And I think some of the, Avicii launched back here, and then you got like Umbra went and set a record for the raise. Same kind of situation though. You had this bottoming out action with very, very low volume, right? Very low volume bottoming out, and then kind of a repricing. Now we've had the life cycle here. Now let's talk about the life cycle, right? Here you're early. Now at this point, I think you're probably late early. I do think you're late early. You're still early though. And this could be the point to bottom out. Now again, you're late early here, you're late early here, and you're late early here. You just don't want to be buying up here at the top when we're getting all this volume and green candles like this. You want to be buying late early here. And so we're in that late early stage where either again, we're late early and things collect and this continues to go higher, reaccumulate and things go higher, or we're in the late early stage where, okay, we missed the early, we're late early, we could keep going up, or we could just, again, kind of fizzle out for eternity if revenues and stuff doesn't pick up. But this is the stage where I'd be interested. I mean, we've been sitting down here, we've got low volume, we're pretty bottomed out. The ecosystem's starting to bounce a little bit. The broader crypto landscape starting to bounce a little bit. So here's MetaDAO. I would just keep note of that. Josh, do you have any opinion on this?
No, I mean, we talked about it yesterday a little bit, but sorry, I was looking at something on X, but yes,
yeah, all good.
Opinion.
No opinion. Okay, let's talk about Repo then, Crypto Jones, because you bring that up. And Repo is very interesting. Shout out Repo, actually. The team was grateful enough to send us some tokens just out of the kindness of their heart, unprompted. So shout out
unprompted.
To Repo team,
we do appreciate it. Yeah. Thanks, RG.
Yeah, completely unprompted. We are not really like ever pulling people on here and asking for tokens unless it's totally like something we just don't cover, which has happened one time, I think. Nonetheless, or it's not tokens. Nonetheless, Repo's looking really, really good. Chart looks great. They had this 20 million basically letter of intent to go through their protocol. Yeah, I think they have a really interesting vertical here. I'm wondering what, I just need to track activity, I think, a little closer. If activity is really starting to spike and grow, then that shows the protocol is working well. Again, it's back in the data. I think we're very bullish data in general. So Repo chart looks good. Meteora looks really good. Let's talk Meteora. Again, you guys know my thesis on Meteora. This right here,
Nice.
and I know I'm doing a lot of this looks like this, but look, this price action right here comes right after a big spike. I'm thinking there's someone doing some manipulation here, which plays into my thesis in a second. We got this big spike, likely manipulated, and we got this like bottoming out kind of arching low here. What does this look like? Let's go back here. Looks pretty similar to this, right? I mean, we just got a massive spike, pull back the same day, kind of got this bottoming out action, which eventually led to the exact same thing right here, right? So spike, bottoming out action, even a little bottoming out action here, spike, same thing. We got the spike, we got the pullback. Now, I'm not sure who's manipulating this or who's making these trades.
I think it's just like a sandwich trade. It's just like a big,
I think what it probably is someone has large positions in Meteora, and what they're doing is, or what they're doing is they're going long on perps, or they're going long on exchanges with leverage. They're buying up a ton, and then they're going short. They're closing out their leverage position, and then going short with leverage and selling it all. I think is the situation. And so they're manipulating price and benefiting off of the profits from the leverage. I think that's what's happening here. Because Meteor, I believe, is listed on a lot of these exchanges and places you can actually go and trade leverage on. So I think that's kind of what's going on. Although at 82 million, still Meteor is super bullish because we just covered the MetaDAO ecosystem. Printer's been popping off. Any way you skin the cat, Meteor has revenue coming back, right? They have revenue coming from pre-stocks. They have revenue coming from launch pads. They have revenue coming from delimbing. Anyone coming on chain, they're pretty much the infrastructure for them at this point. So it's like, if you think on chain has a future, or if you think Solana on chain has a future, you think Meteor has a future. Yet to be determined what the value of the token is going to be. That's the big uncertainty. I think if we get that certainty, this should reprice in a huge, huge way. But I'm bullish on Meteor, so I'm not going to shove it down your throats. Kled got a repost from Solana today. It's pinned on Solana's profile last I checked. Kled looking good. Again, interesting situation for Kled here because we're at fair value according to their $280 million last raise, and their 5% execution. What has not been priced in yet is if the token flywheel is going to be meaningful and if they're going to be able to get up from that 5% to the 10%, which they have options to execute on at future priced rounds. People seem to not think that's going to happen. And maybe it doesn't get to the full 10%. Maybe it gets to 6% or 7%. But this is currently pricing in at the latest raise. And we know markets are forward-looking. And we know Kled is a growth sector product, right? It's a growth investment. And we know Obby's targeting a $750 million raise and then by the end of the year, right? So in the next 6 months. So if this goes from 300 million to 750 million, even with just 5%, even with the flywheel and token side being valueless, you should have a reprice of over 100%. Now, okay, again, if then, right? If he goes and raises to 750, then you should see a reprice. And we know the markets can be brutal, so maybe it doesn't even reprice. But the market should be forward looking, and they're not right now for Kled. Yet they are for Pumpcade, which is why I'm watching Kled closely here, because they have been forward looking. And I'm not sure if that's the hype for the new model or what. So watching Kled. Cards is one. It's pumped fantastic. I told you guys, DCA. Told you guys. This dip is probably for DCAing on cards. This one's becoming very obvious. I mean, they did $28 million last week in revenue. I have the chart pulled up. They did $28 million in revenue last week. Are you kidding me? This thing is trading at a $30 million market cap. Now, yes, that's disingenuous to call it 30 million. I would look at the fully diluted value, but still, it made roughly $30 million last week. It's not even trading 10x price to earnings. We need to figure out what kind of economics are going to flow back to the token, but seemingly there's a lot of interest in economics flowing back to the token. And, how that looks is to be determined. They just changed their marketplace up a little bit to support indefinite lifetime buybacks. So if you have a card you pool, you have a card you pool, you can sell it back to cards. If in 5 months it goes up a ton, you can buy it back for lifetime at whatever price you sold it at, I guess. Lifetime buybacks. Cool feature. Yeah, I mean, cards is absolutely dominating. I really want them to do the futures thing that we talked about, Josh, where they can list the card as an RWA, fractionalize it, and in 6 months to a year, sell it on an auction and people get distributed that, I think it's a huge market. But yeah, cards, watch it. Dive deep into the tokenomics. How is value and economics going to cure back to the token? Because the economics are incredible for this business. Incredible. And it's trading at $30 million market cap. If any of that goes back to the token, which I think they should, it'd be valuable. This could win in a big way. And why I say it would be valuable. Cards has all this revenue. Why should they burn it by going back to the token and buying back or doing something like that? I think Cards is an interesting spot where it's got so much volume, so much attention. They could do what Hyperliquid's done for perps. And they could really align communities and really align incentives if they start pumping a lot of this back into the chart with people. And that's kind of what made Hyperliquid the de facto perp winner was, hey, they gave this big airdrop. It wasn't the de facto perp winner before this, but it massively grew because everybody had skin in the game. And I think Cards can do that because it's seeing really early volume. Now it's like, okay, we have all these users. We have everyone interested in crypto. Solana's talking about, they have a stream with Solana today. We're talking about it. Everyone's interested in cards. Economics are through the roof. Now let's align incentives. Okay, now you have tens of thousands of evangelists. I mean, how many people are holding this right now? 10,000 holders right now. I'm sure that grows. You've set 10,000 evangelists for cards. I think this becomes, or has a good shot of becoming, the de facto card TCG platform if they do something like this. So I do think there's an opportunity there. I know as a company, it's like, okay, I don't want to light money on fire and do all these buybacks and push economics through this token when they're so great right now. But it's like,
no, but there is some net gain, kind of like Hype. Like you attract traders to your token, which then trade on your product. And Cards is similar to that. They're in a similar, different type of business that is financialized. So, yeah, but that's my Cards take. I've gotten incredibly bullish on Cards. So my three that I'm really bullish on is Met, Kled, and Cards. And if Pumpcade gives a really elite pricing, maybe I jump in Pumpcade, but maybe not. Also. Let's talk about this. I'll address this real quick. The silence around the Met token is a concern. So they have a plan for the token. So here's the thing. In the past, they've mentioned, Soju's tweeted about this. He's mentioned interest. He's very interested in the equity. They have the Bedrock framework. You're right. There's a lot of silence and uncertainty around the token. I think that's frankly what's holding it back a lot in tandem with the market conditions. And I don't fault anybody for not wanting to gain exposure in Met because of this. You know, why would you, right? If there's uncertainty around the token, if there's no intrinsic value around the token, why would you buy it? I agree with that statement. I'm under the belief that there will be. And I guess this is also kind of the take you could have if you're buying Orgo. My belief is that Meteor has Bedrock. I think the team's extremely community and token aligned. I mean, look, they sponsor this show. They have a lot. They sponsor the Meteor ecosystem's going and doing a lot for the ecosystem. Like they do a lot to push the community forward. They were the sole driver of ICM. And I think that kind of, I say that because I think it goes back to the core principles of the team. It's like, they want to make this token valuable. And they said, there's no equity and there's no token. It's like, there is just a token. Soju said that it's not like we have an equity side and a token side. We just have the token. And so I think, they're going to add the referral system to Meteor's, liquidity side, which will be interesting. But I think outside of that, they probably will put the equity on chain to some capacity. I believe Bedrock offers up to 30%. And I do think that they will have, right now they have discretionary buybacks. I think they probably do what Pump Fund did, where they do, a smart contract that gives, automatically 25%, 50% buyback. Man, they should just not say, they should just stick with there is no equity. It's just, we just have a token.
It's just a token.
Like what you don't even need to, as soon as you start doing percentage of equity and all this stuff, it's like they don't need to raise capital. Like it makes sense for Kled, right? Because you have to have a cap table.
Yeah.
But Meteor doesn't. They could be just a protocol. This is a crypto company, right? And you look around, you say, okay, what is kind of like I don't want to say Apple stock equivalent in crypto, but like you got to think of it as an investment like that. This is a growth investment. There's real revenues. There's on-chain metrics. You can see the amount of people. They deliver products that generate revenue, that have customers. And as those volumes increase, so will their bottom line. And so I think it's just keep a simple story. At this point, I'm actually bearish on Bedrock for Met's token specifically, because I think it's solving for a problem that doesn't exist for Met. And
That's a
to your
great take.
point, Crypto Jones is, if I were them, I would just say this is a pure crypto company. Look at DRV, right, with Derive. They didn't,
True.
they said the token holders own the IP. It's a pure crypto company, and I think the same applies here.
That's a really, I think, a well-spoken take here. You're right. They've already come out and said there is no equity, there's no token. So it's a crypto. You're right. It makes sense for Cled, which is, sure, it might have some crypto infrastructure through like payments and stuff, but it's a Web2 data company. It's a data company, and they sell equity to other people. Meteor is not doing that, and so it should remain. I think you're completely right. An on-chain asset, and there is just a token, and revenues and economics flow back to the token. Yeah, that's a great take, and that's the thing. We're not in the camp of one shoe has to fit all. Everyone needs to put equity on chain. It's like, if it doesn't make sense, it doesn't make sense. It makes more sense for Meteor to have the on-chain components flow through the token. It's an on-chain company. A Web2 company
Bedrock
that's going
makes
lazy.
more sense for company, like more traditional companies, that have cap table, shareholder agreements, that stuff. So what value accrue should it offer? Well, they buy back the token, right? The token is the network. And so the value, I think this is what's happening with Pumpgate and Cled, is that people are doing the percentages, doing the calculations, then pegging a value to it. There's no network effect. Meteor is a network effect, right? The more people that are providing liquidity, the more launch pads using their infrastructure, the more people trading, it adds almost exponential value to the overall network and competitiveness. And so you just literally have to look at it in that simple light. No one is looking at Pump and being like, oh, well, is Pump going to do like an equity share? No, that's not the conversation. What people are talking about Pump is like, are they doing something potentially bad or illegal, where they're buying their token and selling it? Like, it's more of a credibility problem there, but no one's saying, oh, should they have on-chain equity? I think the Meteor doesn't, again, Dom just laid out all the good things that Meteor has done, the disclosures they're doing. They are filing with Blockworks' B1 transparency reports. Like, to me, this is already investable in an institutional grade, right? And if not every institution can buy crypto assets, I get it. But the ones that did in the right markets at the right time did extremely well. And this likely is one of those, in my opinion.
It's also hard to like bet against when you look at it's Pump Fund and Meteor for a reason. Pump Fund, Meteor, like this is a top revenue generating platform. It has been for years, like a year plus now. And all infrastructure is coming to it. You just can't bet against it at 80 million.
The price of what Pump is for like valuation standpoint.
Yeah, that's kind of my angle. You just can't bet against it at 80 million. I mean, and you look at TA, whether you like TA or not, you can see some very clear things from the chart, how you want to interpret this, right? But if you look at this chart, I even have to expand it, right? You can see airdrop happens, massive first leg down, massive second leg down, massive third leg down. What's happening here? Okay, still some selling, but like much shallower every time, which tells us the story. People think, firstly, sellers are exhausted, and people think that the value is potentially undervalued or much more valuable at these levels. So
the mistake Meteora made was more a mispricing of their asset at the wrong time.
Yeah,
right. And so Soju said this. He said, look, like we shouldn't have valued our own pro. We should have actually priced it lower initially, so that like basically people got the airdrop. That was the value captures. They all got the value from that airdrop, was the LPs, which is great. You make them wealthy, and ideally they keep rolling those funds back into liquidity on your protocol. But what if they don't, right? And I think Pump, this is what Pump's realizing is, man, we could give this airdrop out, or we could just burn it and
this is what happens if
you got to buy the token. It's exactly.
This
Pump's
is what
going
the
to be fighting
right now.
Pump's going to be fighting that distribution on chain for the next 12 months, and it will be pushing a rope for them. And what that will do is open Pump up to competition, right? To ecosystems that aren't doing that. So it's too late. Pump's airdrop should have happened 6 months ago, 8 months ago, and it didn't. But I digress. I think Meteor is set up well here, and I like it. I don't own any personally. I have owned some in the past. I don't own any personally right now, but I do like it here.
Yeah, I agree. No, but Pump has an obvious deflationary flywheel with a ton of revenue to support it. Yes, I
But
agree.
so
I
does
think
Meteora.
well, but it's a discretionary buyback. I guess now Pump Fund has the smart contract where it is 50% of revenue for the rest of eternity will be going towards
Yeah, I
buyback.
think Meteora will get there. Like, if there's the major legal integrate like tweak there, is that you as soon as you do programmatic buybacks, I think it then becomes kind of questionable in that legal territory. But again, I think the SEC just changed the laws. So wait. Timeouts. So the SEC now said things like programmatic
True.
buybacks, I think, and revenue sharing
Yeah.
are fine. It's a distributed network token. As soon as Meteora says, oh, hey, maybe there's an equity component, then I think it becomes a bigger problem. So,
which is why we see the workarounds.
Yeah, why we see the workaround. So yeah, I'm a big fan of just them doing no equity on this. Just it's an on-chain token.
And I won't speak for Soju, but I think the stance is okay, if we make 10 million bucks, which they make more than, but if we make 10 million bucks in a year and we have an expenditure that could help us grow to 20 million next year, but it costs 5 million, we don't want to have committed, 80% of buybacks, 50% of buybacks,
Agreed.
20% of buybacks when that could be going towards further, growing the protocol. And we know, like, again, Meteor's done this. They have their toes in everything happening on chain right now. So I think that seems to kind of be his take. I do still think like there should be some sort of, certainty on the value accrual of the token. But from my experience, it's okay. We don't want to close the doors to something that could be very big for Meteora because we've committed all this money to do one thing, which is buybacks rather than expanding the business. And I think the answer is in between. It's like, okay, not a hype model where you have almost all of it going, and hype makes enough money to expand the business and have this hype model, but not a model where you have 99% of the profit going towards buying back revenue, going back to buying back the token. I think it's like, okay, maybe 25, 30, 40, 50% buying back the token perpetually at all times, smart contract. And then the other 50%, 20% set aside in the treasury that can go to future expansion, 20% aside for covering costs. You structure it.
Yeah, there's a time in crypto where you make $1 million investment and it might add $5 to $10 million in market cap, right? So,
I'm sized in Meteora, though. I'll tell you this: like, whether you agree or disagree with my thesis, maybe I'm being bag biased, but I sized into Meteora down at these lows, and I think it 10x's from here for sure. Let's see. Let's look at Pump. We're on the topic. Let's see how this response has been, and I think Pump's relatively bottom too.
Yeah.
Now, Pump's a competitor of Meteor, but we can be truthful here. Like they still do really great revenue. They burn 36% of supply. Now they have an overhang of an additional basically $1 billion of fully diluted value that's going to be released onto the markets. Which is probably in part going to be the airdrop. I would not airdrop right here because right here, this is what the Meteor chart looked like after. This is what the Meteor chart looked like. If they do an airdrop, this chart just absolutely nukes. So Pump actually looks good here. And there's certainty on the token. 50% of revenues are going to buybacks. They're making $1 million a day still. That's $500K a day going to programmatic buybacks and burns, I think. And 50% for expansion, which I think is fair. So 1.6 billion fully diluted, 666 million. Now if they're making $1 million a day, that's 360 million a year. Yeah, so they're really only trading at a 2x multiple right now.
It's insane. Yeah.
It's pretty insane. And even if you take the fully diluted value, right, and which now this is not even accounting for the 36% that was burned, is it?
I don't know. It probably would.
not.
I would assume they would have updated it pretty quick, but
okay. Is there a way to see on here the supply? Either way, if it is or if it's not, they're making $360 million a year, give or take. We'll even call it $300 million a year. That's 5x price to earnings for their fully diluted value. Now, of course, take half of that. That's 10x, right? Because half of it's going to buybacks. So they're trading at 10x above price to earnings in a really bad market. I think if the market picks up, naturally, this picks up with it. So if they're making $1 million in a bear market, trading at 10x price to earnings multiples, if this thing picks up, that $360 million a year number quickly jumps to $500 million a year. And the P/E closes a gap quite a bit. I think Pump's actually a pretty good bet here too.
Yeah, you're
might be
probably
a
right.
hedge I take.
You're probably right here, Crypto Jones. But again,
But that's the EV there. Plus
that's the EV, right? And I've actually talked to Soji about this briefly. Is that like the institutional world is starting to see Hyperliquid mentioned on CNBC and like mainstream finance media quite active. And we actually talked to Drive about this and talking about like the data feeds being provided in a licensed format from the exchanges. Like, again, unheard of 5 years ago for those that were working in on-chain derivatives, but it was a key component that made, RWAs tradable on-chain. You could not spoof the data feed. It just didn't work. There was always the threat you would have an issue. So now we're getting this kind of mainstream acceptance of on-chain trading products. So now it's like, okay, well, there's Hyperliquid. Let's go down the stack, right? Okay, there's the Pump, there's Meteora, there's other infrastructure, Radium you could throw into this basket.
All you gotta do is just look at the top 10 rev generating list, and there
you
could
go.
be that risk curve. There could be that risk curve.
And so they'll get thrown into an index together, and then people will kind of be like, all right, who do we trust? Like, I don't know if Meteor overtakes Pump. I think that's a lot to ask. Pump's really entrenched himself. But from a relative valuation standpoint, I mean, there's good floor here. Everything's relative. Where's the risk versus reward? Does Pump go up first? Yeah, probably. But I think if you're got a longer term outlook and you want to be a little more secure, I think Meteor takes market share from Pump is my guess. Does that market? What's more interesting to me is, does the market share go from 5% versus 95 to like 10 and 90, maybe 20 and 80?
I think Meteor is closer to 2080 right now if you look at all the lists.
2080?
And then it's actually more, I think, because you see Pump Fund doing about 70% of and this is specifically for launch pads, right? Not including the other facets of Meteor's business. But for launch pads, it's Pump Fund around 70, I think, Meteor around 20, and then all the other Meteor products making up the other 10. So really it's 30 Meteor, 70 Pump, I think, from the launch pad side is what I'm saying. That's not including the RWAs. Obviously, Pump has nothing to do with RWAs, and Meteor has got a big footprint in pre-stocks, RWA platforms that are like doing gold liquidity pools, and even DeFi platforms. As well.
So their combined market caps to each other, 660 plus, what is it, 80 mil or something like that. So it's like you're 7 something, and then what's 30% of that?
Well, they're actually trading about even. So yeah, this is at 660. Met is 8x below that price at 80 million valuation, right? So yeah, so
it's not a perfect
8
measurement,
times 8 is 640 million. So if you multiply 82 million by 8, it's about 640 million. So they're about 8x lower valuation than Pump Fund based on fully circulating market cap. Yeah.
Anyways, yeah. Interesting.
I think they're both good bids, probably.
If you're constructing a portfolio, it's like, okay, do you want to probably have 30 to 40%? If you're doing an on-chain portfolio, probably, 30% SOL, another 30%, a basket of MET and some other infrastructure stuff. And then you can go on down the list.
The issue with an index or an ETF, like I actually love this idea of an Solana Eco ETF. The issue is, you have a bunch of top 10, let's say any top 10 net revenue generating token you put in that ETF. Of course, they all have different nuances of how much economics flow back to the token. So, yeah.
What about this? So there's the Hyperliquid fund, or Hyperliquid, MicroStrategy equivalent. I wonder if, and I don't know if this is happening, but if people are doing a Meteor equivalent, I feel like there is a market for that happening, and the Meteor team should definitely try and partner to make that happen.
Yeah. I don't know if they really need that. Like a DAT, like a Meteor, like a
DAT, like a Meteor or DAT. Exactly. Yeah.
Again, though, I think there's too much questioning around like what value the token actually holds. More nuance around that. I digress a little bit. Let's check Either Way. We had them on the other day. Either Way is doing really well. Pumped off our conversation. Again, we did hear that they had market makers. Now, I've been against market makers. Josh has a little different outlook on market makers. He thinks it's good for a chart. In this case, he'd be right if the
For a
market
chart,
makers.
I think it's good for trading activity. Yes.
I will say though, market makers like this.
Not all market making agreements are good for charts.
No, and they typically end in the fashion we saw during the AI run up, where you had Wintermute market make a ton of products. They did really, really great, 100, $300 million valuation. But then when the music stopped, it was unloading fast. And these things just, nuked as hard as ever. So just as fast as they go up, they can go down even faster is the one caveat. But this looks good. Dupe, I was, telling you guys to sell. I don't think the economics of the company are represented at all in the token. Yeah, that's aged very well. So
yeah,
hate to do it because I like Dupe as a company, but Dupe as a company is not trading on chain. Some level of points program is, which I feel is meaningless. Let's talk about Orgo because I know Crypto Jones, you want to talk about it a bit. Recap on the conversation. And Josh made a good point the other day. Like we could have sat there and talked to Spencer for an hour just about the token. And we try to be, I guess, fair in all things, right? Fair about the questioning. The thing is, we are a show where we're trying to like make sure we get anyone on at any time. There's big news, and so like that kind of means keeping a cordial relationship. And we didn't want to just shove, and we have a great relationship with Spencer. So we didn't want to keep hounding on that for the sake of just like making sure we keep people coming on the show whenever there's something important to talk about. But I think generally the consensus was disappointment in the 5% number that was thrown out there, which I think, you can validate those feelings. That's fair. I think the benchmark Spencer's going off of he seems like that seems to be the standard right now. And he said 5 increasing up to 10%. The argument becomes, they're not at a 7-figure run rate yet. They're at mid 6 figures. They're doing great business wise. About to hit 7 figures. They made more from the token. They launched the token. They made more money than they have run rate right now in the company from the token.
In terms of AR annual or
in terms of
revenue.
fees, yeah, recurring.
Yeah.
In terms of fees from Believe, I think they made over $500,000, potentially even 7 figures. Remember, this was Pasternak's one of Pasternak's main holdings. He talked about it. The only thing in his portfolio, it was hyped up like in tandem with Believe. So they made a ton of fees, more than Kled, I think. So I do think they made. And so the question becomes, okay, if you got a mid 6 to 7 figure check to support your company at the idea stage, at the very early stage when there was nothing, what would that value be worth? And for a YC, that's maybe 10%. A 7-figure check at an idea stage, probably a lot more than 10% actually. And so I think that's where people feel a little slated. I think at this point you have to take that feeling out of it. Just being a
My go on this is like it is what it is, and the point of having Spencer on is to get information out there so people can kind of make a decision.
Not to change his mind.
Yes, he got probably talked in, and he said it himself, Ben convinced him to launch a token. So he did. He's like, hey, maybe I'll integrate this into my product. Good flywheel. When you launch tokens, I don't think you're going to make $400,000 in fees, right? You don't know if it's going to go well or not. Mm-hmm. Yeah, obviously the market was hot and things were doing well, but at the end of the day, like you put something out there in the world and sometimes it goes well, sometimes it doesn't. And so Orgo almost is like, it's almost like, I don't know. No, it fell victim to its own success from the token standpoint. The story was right. The narrative was right. Great founder, Believe peak ICM season, mania, speculative mania. It was a benefactor of that, but it also kind of is, it's suffered from that success. And now it's kind of like, okay, where can we salvage some value?
So in the sense as like, hey, I wanted to launch a token. We weren't even thinking of equity at this point. And now looking back, it raised so much equity, but I wouldn't actually have wanted to sell 10, 25% of my company. And now it's kind of expected, even though like that's not really what I signed up for.
What if the Orgo token had only generated 50K in fees?
Right. You wouldn't want to give up
Right.
25% for that. Though this is a retroactive conversation. Now we're looking back. We have all
so
the
now we're looking back. I'm just analyzing what happened in the past and trying to say, okay, how is he thinking about it based on the conversation he had? Now, my feedback to Spencer would be, you know, look, your business is going great. You do have this asset that if, you know, do the right thing. I think like that's my definitely my thing.
always.
But also like be prepared to answer these type of questions because they're going to come up. Go ahead, say, look, and I think this is what he did, but like, you know, say, look, we're going to raise capital. We're going to raise our Series A. We then have the capital to actually build this business out, right? He still has a somewhat compute intensive business and he has to be able to pay for it, right? Even if, and the clients he's bringing on are kind of like, hey, we want to see this first, right? He's talking to large insurance firms. Large firms like that, they want to see proof that things work. And so you kind of got to do a little bit of work first to then get that deal. And then they're on payment terms like net 60. And I know this because I've sold into large banks that are worth 50, $60 billion. And it just takes time, right? And so now you're going to build this business slowly. And so, yeah, raise that round, then figure out what the token is part of, you know, using Street or whatnot. And just be forward with the community. I think he can bring it back. I think he can salvage it here. Is it what token holders want to see or not? You know, I think there's a little people that have, it's going to be a tough one, but it almost is what it is. It's like, I don't think we're going to get more than that. And like, you know, people can make their own decisions at this point, right? And maybe computer use surprises us and Orgo takes off and becomes a huge smashing success. And, you know, it's like, you know, we go from foundation models being like the big things of the day worth billions to now what's the next layer of service providers on top of them? Well, do those become worth billion-dollar companies? Maybe. The thing is, this thing's so new. Like OpenClaw came out and was a smash success. Like,
well, they
3 months
found
ago.
product market fit. So I don't even know if that, like the conversation there, it's like, okay, they actually have found product market fit and they're scaling really quickly. I think, look, whether we feel good about the 5%, feel bad about the 5%, let's look at it objectively. 5% is the number he said. Now, of course, again, none of this is confirmed. Like, this is just, I'm saying it now, but
I don't even think he confirmed it in his head. So,
yeah, you're right. Yeah, he still seemed to be thinking through it on the call, but he suggested 5%, potentially the 5 to 10% thing. That would be, I mean, 25% of supply is going to get burned. So again, like, do you find this at a fair valuation? So you take the market cap at about 1.4 million, right? And 5% or 95% of that's going to be off chain. 5% is going to be represented on chain. So what would the math be on this? And we've done this before. So 1.4 times. So what's the value here then? I don't know. I'm not gonna do the math again. I'm kind of tripping on the math right now, but nonetheless, objectively looking at it, you know, if they go and raise at a 50 million valuation, is the 5% represented on chain right now at a 1.4 million valuation, assuming 25% gets burned, undervalued or overvalued? I think, you know, we have established that there's still like a 70% upside if they go and do the raise. So I hear you guys. I'm with you too, but we just now have to, I guess, look at it objectively, whether we feel good or feel bad about it. At 5%, I like Hype, Pump, and Solana over buying Orgo. Fair enough. Yeah, fair enough.
I mean, fair enough. Portfolio construction.
Yep. But Blocks API, we know they closed their window, so this is just kind of the outcome so far. It seems it's adjusting, and my prediction is since the window has now been closed, again, people can't swap the token to safe agreements. And I think this company was less desirable than Pumpcade. I mean, it is. And so I think this probably trends to the downside, especially now that the swap is closed. Moby continues to push here. Look at this.
Oh wow.
Oh, look at this. Keep an eyes on this. Maybe we should get Mateus back on the show sometime and just see what the development's been for them.
Do you want me to message him now, real quick, while we're sitting here?
Yeah, message him real quick. See if he wants to hop on for a quick little update because the token's looking really good. Otherwise, Swarms is actually looking really good as well. TBD on how the value occurs to the token, but we know they're doing, you know, $1 million a year run rate. So they're looking really good from a business standpoint. And shout out to Swarms. They're on the shirt here. As a sponsor for Accelerate.
Zuki. Is it Zuki? I gotta remember the name. Yuki. Yuki is their customer service agent. Wow, damn, this is 900K. Let's go.
Oh, and let's look at PMX for you. I'm not sure if you had the chart up already. You talked about it, but here's GSD. Not doing much. I think, yeah, this is going to take time. GSD for me comes down to, let's see how this cloud works. Let's see if revenue starts getting pumping, and we know that they do have a, you know, buyback system set up. So if volume picks up, and just like the GitHub stars, people really use the cloud, then I think it goes up. But same strategy we're looking at for PMX, same strategy we're looking at for, you know, Pumpcade. It's okay, tokens down, but economics metrics are actually up and people just aren't paying attention. That's what you're going to wait for GSD here. Are we going to get really good economics that are quietly growing on the back? And are you watching their growth happen? No one else is noticing. That's when you position. If you were doing that for cards and you said, hey, cards was all the way up here, now it's corrected like 80%, but their economics are like absolutely flying. You know, that's when you have a bit of an edge. So I'd say same thing for GSD here. Let's look at PMX just to get the chart idea. And same strategy applies for PMX as well. So beaten down. We know PMX ran to 50 mil, 60 mil actually. It's gotten beaten down, had a lot of promise. Could it make good on this promise? Could it be a really successful product? To be determined, but what you can do is watch the numbers, and if TVL starts increasing and the protocol starts getting traction, well, then you can probably snag it. Still sub 1 million market cap. We got the initial pump from them basically saying we've been working 4 months, we're coming back. Doesn't look like anyone really front ran this, which was nice. No real insider trading, so that's promising, right? If he would have gone and bought up, if we see price action go and is trending up to here, and then the announcement happens, well, then I would maybe stay away from this. That didn't happen. Since then, it's kind of had time to cool off. Now I think people are waiting for what comes next. Does he reveal the product? Does he come on live and talk about the stuff he's been working on? And that's why we're in this position here. 900K, I think it's a toss-up if that's good value or not. But again, man, Moby is just absolutely ripping. 2.2 million now. Just 1 minute candles going crazy. Again, I'm wondering if this is base integration getting a lot of traction here. Let me go to the Moby Twitter account and just see what I can find. And before I do that, and before I do this, guys, because we have to put some respect on Trojan's name, go ahead and trade Trojan for the best cash back in the game, up to 50% cash back at trojan.com/@MCG. You know, they don't have a mobile app, so this isn't even really competing with them at all. They have a terminal. Moby has a mobile app, but just letting you know, if you want the best cash back in the game, trojan.com does that for you, up to 50% cash back. And then they've got a really great mobile setup. I use it. I told you about the gold cheat code the other day. If you want to stack some gold and potentially win some money. Let's see. What does Moby have to say about some of the stuff going on? What could this pump be about? Let's go to Mateus's account. Moby agent, asset dash. Okay. Some ideas for your weekend plans. Okay. Okay. Base. David from Base said, follow the smart money on Base with Moby agent. Oh, interesting shill here. Ecosystem and ventures at Base, consumer and social. Interesting. Okay, so Base is endorsing Moby. Really nice. Really nice to see. That could be potentially what's causing this pump. That was 18 hours ago. Moby is live on Base. Moby started as a home on-chain discovery. Today it goes multi-chain. Yeah, it looks like it's going to talk through some of the features. Again, great features. Really smooth app. Crypto Jones vouches here. I think live on Base is what's going on here. People are realizing this is like the only person really competing with FOMO right now. And it doesn't have like the negative EV that FOMO brings to the table. It's got actually, you know, stuff that gives you edge. So I think that's the crux of this pump. It's on Base and maybe it's gaining some really good traction. I would love to get metrics. Where can I see metrics? Now they do have programmatic buybacks, I believe, right? So we could actually see how well they're doing based on buybacks. What was it 50% of all revenue going to buybacks? Was it that high?
From Moby, it was discretionary. I don't remember the exact name.
Was it discretionary? I feel like it wasn't. Let's see. Let me see what I can find. Creator fees. Moby fees will allow us to unlock potentially millions to fuel the grow the Moby buybacks as a community.
There we go.
50% of creator fees will go towards Moby buybacks. 50% of creator fees will go towards ongoing products. So, okay, yeah, 50% of the fees that they're making. What do you mean creator fees, though? Trader fees?
This tweet is from August 13th. So it's actually, I think this is out of date, I would say. There's a good chance that's out of date.
Okay. You're right. Good call out here. I do remember Mateus mentioning some sort of buyback economics, and I thought it was
there was, but it was might have been 30. I don't know. It was there wasn't a hard number, and it was kind of, I think, discretionary still.
Now let's think back, and I gotta go watch back some of these Moby interviews actually, because I believe he said they were running at like a 4 million. Last time we had them on, again during a pretty bad market, they were doing like 4 to 5 million annualized.
Yeah.
Which is, if this is picking up significantly because of base, they're trading at 2.3 fully diluted value, which is half of their price to earnings. Now, if they're doing a 20% buyback, they're still trading just slightly above price to earnings. Interesting. If they were doing 5 million, then maybe that stayed flat, maybe it's dropped, or maybe it's gone up with base. I would assume it's gone up, hopefully. This could be fundamentally undervalued. Watching this. This is the Moby take.
RIP to that person that dumped for it. Whoever's it's,
What did this go down to, man? Moby went all the way down to 1.4 million.
Yeah.
Yeah.
I mean, this is kind of like a dino. It's a bit of a dino coin. But
I think they should relaunch.
Yeah. I mean, like, I was going to actually ask you about this because I think you mentioned that for, I think something like PMX too, that they should start with a fresh chart. Why is that?
Oh man, one look at the chart, people just don't even give it the time of day. And it's going to take so much. Like, it might move 10x from here and it'll look like a blip on the chart because it was up at 60 million. So just because the chart went so high, same thing for Moby, because the chart went so high, because the chart's been around for so long, it's just like, you look at this, it's like, oh, there's no recovery. Like there's no, it had its day, it's dead. When in reality, it's like doing something completely different now. It's a whole new product offering. So yeah, and I think a new chart gets new attention. They're like, oh, Moby, what's Moby? Oh my gosh, I remember Moby. What's going on with Moby? It's got a new chart, gets fresh attention, resets the thing. It's at least now when you could see pump, it actually registers on people's radar. Like, if you're sitting here and you look at the Moby chart, it's like, oh, nothing's happening. Okay, no, but we're up 45% in 24 hours. They don't even realize. So there's a few reasons. Now, of course, it gets tricky. I would say, yeah, you're going to lose some holders. What I would say is have the conversion happen. If 20% of people don't convert, mint an extra 20% of supply and hold that in your treasury. And if people want to go and claim the token over the next year, they can do that. So non-dilutive in this case, they get a fresh chart. I think that's kind of what Moby should do. But yeah, looking good. That's it. We covered a ton of tokens. Guys, if you're not following the MCG Alpha account, I'll kind of break down the strategy here. So the MCG Alpha account is going to be much more token focused, call outs, our thoughts on Moby, our thoughts on PMX, our thoughts on Pumpcade, our thoughts on Cled. Whereas the main account for MCG is going to be like high level thinkers, full interviews, all that stuff. The notes are all going to come on the MCG Alpha account. So give it a follow if you don't already, MCG Alpha. And again, that's going to be much more thoughts on Pumpcade, kind of random side thoughts. So go give it a follow. I think there's going to be a lot of alpha and value there.
All stream notes. So go click replies is where you'll see the stream notes.
Yep.
And I'm trying so I don't know if you can show that, Dom. So click replies. There you'll see, if you go down, that's where all the notes are going to be. It's getting shadow banned by X. I keep getting notifications. I'm trying to do it so that they don't think we're trying to do inauthentic behavior.
What do you mean?
So I don't
shadow
know
ban?
what the I don't know what the solution is here.
Okay, you're
It
getting
says,
notifications for
well,
that?
yeah, they say we're limiting your reach because we think you're, manipulating. So I've changed the name to see if that's helped. I've done a few things, but I don't know. We might end up just being on the main account doing stream notes,
Or the notes might go to Telegram, to be honest.
Yeah, it could. I just like it on there because it gets screenshotted, and there is some reach benefit to having notes publicly. But yeah,
Lucas just made a tweet. Ecom Guru. Okay, here. Let me pull something up here. Yeah.
I
okay, never mind. Maya
didn't
just made a tweet.
mishear Spencer. I didn't mishear Spencer. He was saying that he's still thinking about Street.
Yes, 100%. 100%. I think they might have just stopped conversation. Didn't help pay AI. Oh, relaunching? Also, yeah, I mean, look, you have to do it with a good, I think pay AI's got a good product, but like, I think they did it at the wrong time in a bad market. You're right. Maybe it doesn't help. I just think a fresh chart looks better. Even if it launches, goes up to 1 million and goes back down to whatever, at least it's much easier to like recover from that. But here, share this tab. Econ Guru kind of cover the MCG conversation we had with Spencer. Lucas commented, just to clarify, Orgo is not on Street at this moment, but we all knew that. They're not on Street at this moment, but they could be in the future. He didn't say they're not talking. Yeah. So, all right. Cool, boys. I think we got nothing else. Happy Friday. Take some time to enjoy the weekend. We're going to be in Miami next Monday. We'll be streaming from different scenery. So tap in. It's going to be fun. We're going to feel it out, see how it works. We'll just be chilling. Hopefully you have a ton of builders come through, cover some hackathon.
Yeah, watch
winners.
the EZA platform. There might be some new deploys that pop up on there. They've, apparently hit 1.4 million in recent volume. Again, small volume, small platform, but some people said it gives them the old Believe vibes. So
yeah, they just changed their fee structure as well, which I think was overdue. Equity though, same Believe vibes, but nothing different from Believe.
Yeah,
just
keep that in mind.
great
They're very much idea tokens.
Nothing has changed from Believe, which is terrible.
Nothing.
Nothing has changed from Believe, and we saw that ended up. So we're big fans of EZA. Obviously, we're going to do their hackathon, but I think they need equity aspect. We talk about what tokens need equity aspect. Non-crypto native tokens need equity. That's what EZA needs to do. They got a great pipeline though. Love Dom and Phil. So we'll see how that ages, but we'll be there in Miami, and hopefully by interviewing a lot of these hackathon winners, we can get a good direction on just like where things are headed. I think that's kind of one of the big goals coming from this. So Chill is not going to Miami. He's a cyberpunk, man. This guy wants to stay anonymous, so we respect him on that.
Yeah.
And we really don't need 3 people there.
Yeah, Dom and I are the IRL LARPs. So
the LARPs? What are we LARPing?
I don't know.
I don't know. I don't fucking know, bro. All right. We'll see y'all, boys. Love. Have a happy Friday. Enjoy.
Peace.